Equity trading of Francine Lacqua here in London, and here are your top stories. The UK and EU seal the deal. Now that Prime Minister Rishi Sunak must sell his breakthrough Brexit framework to sceptical Northern Ireland politicians. Santander pledges to return a larger share of profits to investors as it announces a new buyback. We'll hear from the chair of the Spanish lender, Ana Botín, later today. Plus, as Europe accelerates its environmental transition, we also speak with two officials leading the charge, the EU Commissioner Margrethe Vestager and Werner Hoyer from the European Investment Bank. But first thing is first, let's take a look at the futures. Now, for the moment, we're not only looking at inflation data in France that's putting a lot more pressure on the European Central Bank, but also on the French president. We also look at some of the data that we had overnight or yesterday in the US and how that's been playing out in Asian stocks. So we're seeing a bit of pressure. European stocks, the futures were down 0.5%. I think they're just starting to open, so we'll see how they settle. But again, we did have a bit of a rally, but there hasn't been that much conviction out there. Treasury yields ticking higher across some of the tenors, the 2 and the 10-year advancing by more than 2 basis points. If you look at some of the big narratives out there, it's not only the China reopening, but of course we have to go back to that US date on Monday, further outlining some of the challenges facing the central bank. In fact, pending home sales increased in January by the most since June 2020. The other piece of news, of course, is what's happening with the ECB, and that's probably playing out not only for Euro 105.99, but certainly in a lot of the bonds in Europe. So I think we need to get to the German 2-year yield. You can see at 3.139. Big move actually in some of these bond yields yesterday. Now we're also getting some breaking news. Spanish CPI, that preliminary February harmonized figure, coming in at 6.1. So it's hotter than expected. We were expecting a 5.7% handle. Again, if you look at inflation across the board, so not only in France at a record high, but we're also seeing in Spain, it's putting a lot more pressure on the ECB to deliver more interest rate hikes, but also raising political risks for some of the leaders there. Now, the UK and the EU have finally sealed a deal on Northern Ireland's post-Brexit trading relationship, potentially ending a standoff that's poisoned relations between London and Brussels since the UK left the Union. Now, the Prime Minister, Rishi Sunak, hailed the agreement.
Today's agreement delivers smooth-flowing trade within the whole United Kingdom, protects Northern Ireland's place in our union, and safeguards sovereignty for the people of Northern Ireland.
Now, for more, we're joined by Bloomberg's UK correspondent Lizzie Burden, who's outside Westminster. Lizzie, so we have a deal, Sunak's deal. How is it different from his predecessors?
Well, you heard Rishi Sunak there, Francine, claiming this as a victory. What he says is the difference is he says he's fundamentally rewritten the Northern Ireland Protocol. For example, on VAT rates, now it will be London rather than Brussels that's setting them in Northern Ireland. That's something that Brussels previously said couldn't be done. He's also reduced the number of checks on goods going between GB and Northern Ireland by establishing a green and a red lane. Green if goods are just staying within the UK, red if they're going on to the rest of the European Union. But in terms of the role for the European Court of Justice, he has established the Stormont break, which allows the Northern Ireland Assembly to delay or potentially stop the application of EU laws in the region. However, the ECJ will remain the ultimate arbiter on the application of EU laws, and he hasn't been able to completely remove EU laws. applying in Northern Ireland. He's just reduced their number. So the tensions are going to linger until, first of all, we've had a vote through Parliament, and secondly, until power sharing is restored in Stormont. But you can see for now, the relationship between London and Brussels seems strikingly warm. You heard Ursula von der Leyen yesterday calling him Dear Rishi.
Yeah, that's certainly a change of tone from some of his predecessors. Lizzie, can he now win the support of the Unionists and the Tory Brexiteers?
Well, this is what it's all going to hinge on. First of all, in terms of the deal in Parliament, Rishi Sunak has actually got the numbers, it seems, because the opposition leader, Keir Starmer, has said his party will back the deal through Parliament, but Sunak will want the DUP's votes because the Tory Brexiters will follow them, and he wants to heal his party. So in terms of restoring power sharing in Stormont, Sunak is in Belfast right now trying to woo the DUP. He's also speaking to businesses who he says will practically benefit from this agreement. But we heard from Geoffrey Donaldson, the DUP leader, this morning. He says there are some points that the DUP needs to continue engaging on with the government, but he says we're reasonable people, so there is optimism. It's a conciliatory tone. And after he spoke in Parliament yesterday, Geoffrey Donaldson, you didn't hear a peep negative out of the Tories, not even from Boris Johnson or Liz Truss.
Yeah, Lizzie, thank you so much. Stormont, of course, a building in Belfast, a Parliament building in Northern Ireland. Now let's bring in Bloomberg's Christine Aquino. Christine, I don't know whether this is a real market moving, because it now, still really depends on how hot inflation is. How are UK assets taking this new Brexit deal?
Well, Francine, I think we saw the initial reaction yesterday as a mild positive. That's probably how I would describe it. It certainly put a floor underneath UK assets, even if it wasn't particularly a reason for the pound to go to the moon, But yeah, there is a little bit of optimism here. But you're absolutely right. I think how UK markets will factor this in is more of a longer-term play on the impact on growth and the Bank of England's calculus moving forward with its policy. And that's all remaining to be seen, given that Sunak will now have to get his Tory party colleagues and the Northern Irish politicians on board before we can finally call it a victory on this deal.
Christine, we're just having a bit of repricing actually on money markets, now fully pricing in a 4% peak ECB rate for the first time. We had hotter than expected inflation figures in Spain, pretty strong actually at a record inflation figures in France. How hard does this make the ECB's job?
Well, Francine, I think they're really leaning into this idea that they're going to have to do more. We've heard from Madame Lagarde again reiterating that 50 basis points in March is basically a done deal, and they're really guiding markets toward that positioning. But I think it really is the difficulty for the ECB is trying to hammer home the point that they have more work to do on inflation. They're going to have to keep going and convincing investors that that's the right path without panicking them too much and leading to a sell-off.
So is there a worry that actually we need to change the way we view inflation overall? Because we were expecting inflation both in Spain and France to come down. They both went high, quite significantly higher actually than expected. So it's not really doing what it thought it would.
Yeah, absolutely, Francine. I mean, it's worrying that the direction of inflation is still ultimately upward when the ECB has delivered so many rate hikes already. And I think they're really going to have to emphasize that their work here is not done. They're going to have to deliver more, and markets will have to kind of get on board with that idea. And so it's going to be interesting. Obviously, it's playing out already in the rates market. Yeah. So we might see more repricing in the broader bond market from there on out. But then also how that plays into the currency, because it's also a battle with the Fed, right? Can they out-hawk the Federal Reserve at this stage, and how that plays into the euro?
Christine, thank you so much. Christine Aquino there from our markets team. Now, coming up, we'll be live in Luxembourg at the EIB Forum. We'll speak to the EU's Competition Commissioner on green financing, tech, and much more. Guy Johnson on the ground there for us. This is Bloomberg. you're so intimately linked to the future of the UK. What are you seeing when you go to branches and in the country?
Yeah, we're seeing a lot of anxiety at the moment. I think the recovery from the pandemic has been and is continuing to be very strong. So I think we're seeing the economy recover. But with rising interest rates, with inflation, those are things that peoples and families and businesses haven't had to deal with for 10 years. So a lot of business owners today haven't had to operate in that environment. So it's causing quite a lot of anxiety, which means for us, because we're up and down the country in branches and offices, we can spend a lot of time talking to businesses and helping them plan and deal with it. But it is, it's very different, and it's not something people have had to operate in for a long time.
You've got to explain this one to me. What does it mean when the White House says we're watching markets carefully?
It means they have a Bloomberg.
I've seen the Bloomberg.
They have.
I've been in and seen it.
Lots of Bloombergs. Lots of Bloomberg. Lots of Bloomberg. Lots of Bloomberg. Lots of Bloomberg. Lots of Bloomberg.
I've seen the Bloomberg. I've seen the Bloomberg. I've seen the Bloomberg. I've seen the Bloomberg. What does it mean? What does it mean? What does it mean? What does it mean? What does it mean?
It means they have a Bloomberg.
Could face bigger challenges next.
It was going to keep rate World Cup. This is a 3.
As the economic picture does.
The BOK is getting ready to make a decision.
Welcome back to The Open, everyone. 10 minutes into the European trading day. We look at equities, but more than that, we also look at bonds in Europe. But French inflation actually accelerated to a record for the month of February. And that, of course, is increasing and will increase pressure on the European Central Bank to deliver more interest rate hikes. Now, the European Investment Bank is calling for more green financing to enhance the continent's ability to compete with the U.S. in the wake of President Biden's Inflation Reduction Act. Support for clean energy technology is one of the topics discussed at the Development Bank's annual forum today. Our very own Guy Johnson joins us now with a very key policymaker in that discussion. Good morning, Guy. Over to you.
Good morning. She wears many hats. She's in charge of digital. She's in charge of competition. She's an executive vice president, of course, at the European Commission. Executive vice president of Vestager. Good morning.
Good morning.
Nice to see you. Thank you very much indeed for hustling all the way from Brussels to see us here this morning.
It's good to be here. Thank you.
Let's kick off our conversation and talk a little bit about green subsidies, and then we'll talk a little bit maybe about competition in the second half. The Inflation Reduction Act, Joe Biden's Inflation Reduction Act, has changed the pitch for everybody in terms of the way that they're thinking of the energy transition. Should the EU, should Europe try and match what Joe Biden has done with the Inflation Reduction Act?
Well, first and foremost, should we praise that the US is really entering the fight against climate change? Because this means that not only in Europe, but also in the US, as in Japan, as in India, we go industrial scale in fighting climate change. And that's a good thing, full stop. The paradox, of course, is that long term, there's enough for everyone. Because you need green industries in the US, in Europe, in India, in Japan, in China, everywhere. But right now, of course, we need to keep up, because otherwise there is a risk that the acceleration of green industrial deployment in Europe is being paused, and a pause is a risk of stopping. So this is why we need to do something. And here, of course, green state subsidies, they come into the picture.
Keeping up. Can you just kind of quantify what keeping up means? Does that mean matching? Does that mean a little bit less? Can you just give us an idea of the quantum we're talking about here?
Well, I think we're talking about what is sufficient to make it a fair sort of a balance, because I understand completely that it can be a temptation to look at subsidies. But subsidies are not the whole part of the equation. You also need skilled people. You need governments that you can work with. You need good infrastructure. You need to know how you do business. So, of course, part of it will be to match that a subsidy has been given, that predictability that comes with it. But of course, on our side, also the predictability that you can actually do your projects, that you can have your permits within a short period of time. So we are a bit all over the board, not only looking at subsidies in order to match the competitiveness that we see in the US.
When I listen to smaller countries in Europe, it sounds like they're almost as worried about German subsidies as they are about American subsidies. A, is that something that you notice as well? And B, is there a way, and this kind of goes fundamentally to the heart of, I think, what Europe is trying to do, is there a way of harmonizing subsidies in Europe so that the playing field, as you say, is level within Europe?
Well, I hear that a lot. A lot of people are concerned. Will this completely fragment the single market? Are we at risk of losing what we have done over decades in order for cohesion? You know, for everyone actually to grow. And one of the reasons why is that the single market provide as much help to smaller businesses as state subsidies would ever be able to. The value of a well-functioning single market can match more or less any subsidy. So this is why when we look at subsidies, we say, well, you should be able to give more if you have sort of a multi-country project.
Right.
And you should be able to give more if you establish in areas where the business case may not be that good, so that the subsidy actually sort of enforces cohesion perspectives and makes sure that the single market stays as powerful as it is.
And you think that's going to be achievable?
Well, there are risks involved here, obviously, since member states have very different fiscal capacities.
Yeah.
And this is why we are discussing in what way can we also make this effort a European effort. Should we do more sort of European level equity to take sort of the most risky tranche of some of the investment? Or should we have more funds? Or could we be more effective in how we use the funds we have already? Because one should not underestimate that hundreds of billions of euros are being invested in green these years in Europe.
I'm going to ask you to change hats. Let's talk about competition. Excellent. Activision Blizzard is taking a huge amount of time, the Microsoft deal. I'm sure you're deeply involved in it. Clearly, a lot of people are very interested in what is happening here. Who are you listening to get a sense of which way you should be proceeding here? There's a lot of lobbying going on. How much of that are you listening to?
Well, it is very important for me to lend an ear to all sides of this. So obviously, I have had meetings with a number of CEOs, not to get the passion of gaming.
Are you so this is a question we wanted to know. Have you ever played any of these games?
I have not. I am a Sudoku person.
Excellent.
So,
okay.
And I can be passionate about that.
Yep.
But I don't share the passion, but I see it. I see it here in Europe when people play FIFA or action game or shooter games, but I'm not there to sense the
Yep.
passion. I'm there to sense the facts of the case. And as we always do, what is the present market conditions, how to look into the future. You know, we've had a number of cases where we look at sort of the innovation potential, the innovation raise in a certain market, and that is, of course, what I get. So I try to get the full picture because we should not be captured by any side of the debate about the effects of a merger.
Talking of sides, the UK CMA, the Competition Markets Authority, came out with a very quick read on the situation. A, were you surprised at the speed at which it produced that view? And B, are we now in a position where authorities such as yours are almost kind of in a race to come out with a view on any particular deal? And how could that ultimately change the M&A landscape?
I think that's a very important discussion because we cannot be in a race. We need to serve the specific markets where we have jurisdiction. And I also hope that people working with us appreciate that we have a different sort of legal framework. I think in Europe, we are the ones with sort of the highest bar, the most sort of heavyweight legal obligations. We need to produce a recent decision that will eventually go public, but they will also have to stand up for very tight scrutiny in court. The UK system is different. The US system is different again. So even when we look at the same transaction with different markets and different legal provisions, sometimes we'll get to different results.
But on the matter of speed, do you think things are changing? Do you feel pressure to do things more quickly?
Well, we have quite tight limits. If you get a case solved in simplified procedure, basically you're in and out of the office like this.
Yep.
If in phase 1, I think it's 35 working days, also a very speedy procedure. If we go into phase 2, well, then we have a couple of months more available. But we're the ones, I think, with the sort of the most strict deadlines that apply for everyone. So for us, it's really important to have equal treatment. If your case is simple, we'll get you going as soon as possible. It's only when things get more complicated that we get into what we call phase 2.
A couple of quick questions. Speed seems to be an issue here. Let's talk a little bit about ChatGPT. It seems to be becoming a bigger and bigger part of all of our lives very quickly. How are you going to play catch up? How are you going to make sure that the regulatory authorities understand what is happening here?
Well, what we're doing is to say, well, be aware what you use it for. If you use technology, and everyone can see that this is very powerful technology, if you use it where something crucial is at stake, you really, really need to know what you're doing.
Yep.
If when I ask, and I have done that, families coming to Brussels, what should we do in these 4 days? Well, if it's not open anyway, or the event was last week, or in 2 weeks' time instead of this weekend, well, I'll manage.
Yep.
But if it's a question about, can someone get this subsidy? Can someone get this mortgage? Can someone be accepted to university? That's a completely different ballgame. So we work on a risk-based approach. If you do something really risky, well, don't leave it to the AI.
Another quick question as well. The Commission has asked staff to remove TikTok from phones, work phones. What message does that send? And as a citizen of the EU, you look at what is happening within Brussels and see this decision. Is that something that should be replicated elsewhere? Should citizens be viewing this as advice to remove it from their phones as well?
Well, I think they should be comforted that people who have responsibility, who are dealing with information and data that should be protected, that they do the best to do that. There are 2 investigations when it comes to privacy concerning TikTok. They're not done yet. This is a step, sort of a precautionary step when it comes to cybersecurity. So
what are you worried about?
Well, it's as everyone knows, cybersecurity has come higher and higher and higher on our agenda. We see the risks, both from criminal efforts, but also from sort of country-sponsored efforts to undermine what we're doing. So it's precaution. It is to be careful. It is to say, well, better safe than sorry.
This is about China.
This is about, of course, the risk that a company is not being, by the end of the day, being able to protect itself against third country authorities.
Just to kind of wrap things up, how did Europe lose its crown when it came to the green investment story? A year ago, as we came out of the pandemic, Europe looked like it was on the front foot, looked like it was making the weather when it came to what was happening with the green energy transition. Joe Biden, the US administration, changed the game so quickly. How did we not see that coming?
Well, I think sometimes I wonder, did the Americans see it coming? Because it was legislation that came like this.
Yeah.
And I think we should still maintain that this is good news, because there's no way that Europe alone can fight climate change. And Europe is still wearing the crown, and we'll be getting there, because we've been investing for decades in order to be able to deliver state-of-the-art technology in order to get where everyone should want to go, which is for a carbon neutral planet.
Madam Vestager, it is always a pleasure. Thank you so much for making time to come and see us here on Bloomberg this morning.
It was my pleasure.
It's a great pleasure of ours as well. Executive Vice President Vestager joining us here at the EIB conference. We're going to be joined by Werner Hoyer in a few minutes' time to talk about the other side of the energy race, and that is what is happening on loans. We'll do that in a few minutes. Fran, back to you.
Guy, thank you so much for that fantastic interview, really touching on everything from ChatGPT to, of course, the IRA and what's going on with everything else, including TikTok. We'll have more from the EIB forum this hour when Guy will be joined by Werner Hoyer. This is a Bloomberg.
Solar energy, wind power, battery-operated cars. The transition from old to new energy forms has investors placing bets on which technologies will come out on top. Bruce Flatt's Brookfield Asset Management sees what it calls massive opportunities. Its new impact fund raised more than $15 billion, and Flatt says it could have raised more. The fund has two targets: companies that need to dramatically curb greenhouse gas emissions, like power providers, and those that are in a position to dominate in clean energy. Brookfield hired former Bank of England Governor Mark Carney to strengthen its environmental, social, and governance investing. In March, Australian utility AGL Energy shot down Brookfield's takeover offer. The firm had aimed to accelerate AGL's transition to net zero emissions by over a decade. Carney signaled that this was no problem. He says Brookfield is reviewing at least 50 potential transactions across a range of industries.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
BSO Now is your online home for weekly Boston Symphony Orchestra and Boston Pops performances. See new concerts that go behind the scenes, plus acclaimed archival concerts. Visit bso.org/now, where the music plays on. BSO season sponsor, Bank of America.
Welcome back to the Open, everyone. 26 minutes into the European trading day. We're still seeing quite a lot of pressure on European stocks, down about 0.5%. Now, a lot of traders were talking about this yesterday. We're not confident in the rally. And then we had some data in the U.S. yesterday. We also had a surprise jump in French inflation and in Spanish inflation. That's really putting extra pressure on the European Central Bank to deliver more interest rate hikes, but also raising political risks for the country's two leaders. You can see bond yields moving on the back of that, with the Italian 10-year yield, for example, at 4.520. Coming up, FTSE Women Leaders has published its annual report on gender diversity in British business. We speak to the chief executive next. What do you say to the cynics that say, look, it's all nice and fine, but a lot of it is greenwashing, and words, you're not a good company, you're just a less toxic company than some of the other oil majors?
Well, the first thing to say is that, you know, I'm a big believer in we need to put ourselves in other person's shoes in life in general. And so I understand that point of view, and I get that people have that perspective. I don't agree with that, obviously, but I understand where they're coming from. We have an enormous challenge as society, which is to provide the world with reliable, affordable, and clean energy. That's what society wants. That's what society needs. And I believe in my heart that a company like BP is actually one of the few companies in the world who can actually make that happen. We can talk about the things that we're going to grow and over the coming years, and I find it hugely exciting and energizing for our organization. But that's what the world needs, and you simply can't go against the grain of society. You can't defy gravity, and that's why we're making the change that we're making.
On the David Rubenstein Show, Peer-to-Peer Conversations, I uncover the untold stories of the world's most successful leaders. Watch Wednesdays on Bloomberg Television.
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
Welcome back to The Open, everyone. 30 minutes into the European trading day, and here are your top stories. The UK and the EU sealed the deal. Now the Prime Minister Rishi Sunak must sell his breakthrough Brexit framework to sceptical Northern Irish politicians. Santander pledges to return a larger share of profits to investors as it announces a new buyback. We'll hear from the chair of the Spanish lender, Ana Botín, later today. And European bonds fall after both French and Spanish inflation readings come in hotter than expected last month. So this is a picture across the board for a lot of these equities. The rally that we saw over the last couple of days seems to be short-lived for the moment. There were certainly a lot of questions on valuations, and then yesterday we also had a little bit of data out of the U.S. That data, of course, outlined the challenges facing the Fed. Pending home sales in the U.S. increased in January by the most since June 2020. And then the other big story is inflation here in Europe. We had not only French inflation at a record high, but also Spanish inflation jumping more than expected. And the big question is, what does that mean for the ECB? How much more aggressive do they need to be with monetary policy, and what does that do to the economy? So if we look at the industry groups that are moving the most, and again, the two strong readings from the Eurozone's second and fourth biggest economies will cement this half-point rate move that the ECB is planning for March. So let's get onto the industries and the sectors, if we have them. Otherwise, we'll get onto some of the data showing us that money market investors are betting for the first time that the ECB's deposit rate, currently at 2.5%, will actually peak at 4%. Real estate, you can see down 0.8%. You also have consumer and autos, travel, leisure down 0.7%. Now back to the UK, and FTSE 350 companies met their 40% target for women on boards 3 years ahead of their target. Well, that's according to the FTSE Women Leaders Review, a government-supported initiative. Well, joining us now is Denise Wilson, FTSE Women Leaders Chief Executive Officer. Denise, thank you so much for coming on. I mean, this is at least a glimmer of hope, some kind of encouraging news, I would say, going forward. Is there a worry that, you know, we now take it as a done deal?
This is a really good day for British business. This is a culmination of 10 years' work, and over a decade ago there was just 9% women on FTSE 350 boards, and now there's 40%. So that in itself deserves pausing and celebrating, but we've clearly got a long way to go. Underneath the boards, in the all-important leadership roles, today we announced 33% women in that group, and ever increasing each year. And those are the roles where we really need to get the focus next and see more progress.
Denise, at some point, is there escape velocity? So when you reach 40%, so you reach 41% today, if you reach 50, does it mean automatically that the way some of the companies hire changes?
Well, we'd like to think not. The targets that we've set are 40% minimum, men or women. So we purposely didn't go for 50%, wanting to allow some flexibility, but also why wouldn't we have 60% women on our boards. It's about gender balance, and that we've set at 40% of either men or women.
But as you say, at the moment it's the board. So when we talk about, is there a catalyst, right? Is there a number that you think will then change the flavor of the organization? As you say, you can have a lot of females on board members, but if the decision maker is still all men, then it changes the DNA of an organization.
Yeah, no, and that's absolutely where we've got to make more progress. Right now, there's 21 women CEOs in the FTSE 350, that's all. We've made, and one of our recommendations is to have a woman in one of the 4 key roles, the chair, the senior independent director, the finance director, or the CEO. We've made good progress in all of those, but not in the CEO. That's pretty much flatlined in the last few years. And, you know, look, I think there's reasons for that. When we make progress in the CEO and we start to see good gender balance, then that's when we know this job is done. But those roles are, their turnover is very low, they're highly prized, highly paid, so people don't give them up easily, and we you know, that is when we know that this work is over. And then, when we have women in every single role, in every place, then this becomes self-sustaining, and gender balance becomes just the norm.
So has COVID changed actually some, I don't know whether it's been a help or hindrance?
I think a little bit of both. What it has done is it's shone a spotlight on unhelpful practices for women, huge long commutes, needing to be in the office, jack on the back of the chair type practices, and allowed much more flexibility for men and women actually. So I think that's, you know, I think that's good for both. I think so long as we hold on to the practices that the flexible working practices, the remote working practices, I think that will be a good thing. But of course, you know, networking and being with colleagues is important as well, as is training. So I think it's about getting the balance right going forward, and I'd like to think we hang on to some of the good things of the old ways of working and embrace some news too.
And Denise, we know there's no silver lining, but has there been, in the recruitment efforts, have companies done something differently which allowed us to get to that 41%?
I think they have just started looking much harder at the full array of talent, at 100% of the talent out there, rather than looking in the 50% that they felt comfortable with or that they knew or had in their network. You know, we always knew there was no shortage of competent, capable women to fill our very top jobs in the UK. We just needed to get them picked. And now I think there's been a good understanding of bias in the selection process. And if your problem is that you don't have women, you have a predominance of men, then when you've got an opportunity, don't interview a whole bunch more men, because you know that's not solving the problem. So I think there's a lot of, I think businesses are changing, and they're understanding that they need to view talent with an even yardstick and look in places they never looked before.
Is there a structural problem actually in how we employ women? And we were speaking to one of the biggest hedge fund managers in the UK, and he said, look, it's quite easy to recruit smart female talent. It's more difficult to retain them just before they get made partner or managing partner.
Well, I think that speaks volumes to the culture, to what's going on in the workplace, and you can, of course, have a revolving door where you recruit women, and yet they don't thrive, the environment isn't right, they get passed over for promotion, and so it is about addressing issues everywhere in the workplace. It is about systematic change. It's about lifting the lid on every single people process to make sure that you're fair on pay, on performance, on bonus, and ultimately changing the workplace culture so it's much more female-friendly than it has been in the past.
I mean, when will we make meaningful difference in the FTSE 100? I know the numbers have gone up, so there's nothing, you know, we shouldn't be undermined by that, but they've increased to 34.3%.
Yeah, look, the transformation that we've seen in the boardrooms is what we're aiming for now at leadership level, and that's the top 80 to 100 roles in any typical FTSE 100. 34% is on the way. We've got a way to go yet, but we've got 3 years till the end of the deadline. So I'd like to think by 2025, then we've made progress and we're on track to hit that deadline. And from there on in, then once you see gender balance, this just becomes the norm. And our hope is it becomes self-fueling. We will see. There's a lot of learning, and we've got a long way to go yet.
We certainly do. Denise, thank you so much for joining us. Denise Wilson, there, FTSE Women Leaders Chief Executive Officer. Now, coming up, European Investment Bank President Werner Hoyer at the EIB Forum. We'll be discussing Ukraine, the European economy, and of course, inflation. Our Guy Johnson will bring us that interview shortly. This is Bloomberg.
I've always been a person who's just been attracted to hair. I like to sit and think and theorize how I can manifest these visions that I have for braiding and how I can take something that may seem like it's a line drawing in my mind and apply that to someone's scalp.
We are the only culture that has hair that grows out of our head the way that it does. Anyone from the African diaspora is born with this amazingly curly hair that can be shaped into a variety of different ways of expression.
I want Black people to love themselves for how they naturally appear, and also to appreciate the cultural practices such as braiding that our ancestors have practiced for centuries.
News breaks. No one covers the world like Bloomberg.
6 people have died from these latest quakes, adding to the 41,000 plus people who've died in those major quakes 2 weeks ago.
A top Sam Bankman-Fried associate said to be nearing a plea deal.
How does that help build the case for the prosecutors against Sam Bankman-Fried?
Biden is here to say we will stay with Ukraine until the very end, and that's really a show of support as well for the allies.
Bloomberg, your global business authority.
From New York City,
from London, in Sydney,
from Washington,
in Tokyo,
9 a.m. in Beijing and Shanghai.
Good morning, everyone.
Have a great evening.
Here's what I'm watching. You do not want to miss this story.
Is there the kind of upside?
Welcome back to the Open, everyone. 40 minutes into the European trading day. We look at inflation in Europe. We have that much higher than expected inflation in Spain and France, and it's putting a bit of pressure across the board with European stocks down 0.4%. Now, the European Investment Bank says EU firms are less likely to innovate or adapt new technologies than their US peers, and that productive investment in Europe is 2% of GDP less than in the US. The findings are part of the latest EIB investment report, which has just been released at the bank's group forum currently taking place in Luxembourg. Well, Bloomberg's Guy Johnson joins us now from Luxembourg with a guest. Good morning again, Guy.
And we're joined by Werner Hoyer, who's the president of the EIB. Nice to see you. Good morning.
Thank you very much.
Congratulations on the event. I have bumped into so many people I've been looking forward to seeing. It is amazing. So
Wonderful.
Congratulations.
Thank you for coming to sunny Luxembourg.
It is sunny. It's sunny, cold, but it is sunny. Right. Let's talk a little bit about the EIB. You are now Europe's effective climate bank, which puts you in competition, you could argue, with Joe Biden's Inflation Reduction Act. That's going to mean 100 billion in loans. The Americans are doing 100 billion. How close to that number do you think we are going to get here in Europe?
Well, I think that's something we can meet. But what is much more important is the fact that although everybody's complaining about the IRA, the fact is that the US is detecting climate and sustainability. And that's good news. Whether the instruments they use is always perfect is a different question. But we are now aligned when it comes to climate policies with the US, and that's a good story.
So you think you can match it? How quickly?
Well, we are doing a lot in the context of Repower EU already. We can beef that up, going from 30 billion to 45 billion within the next five years. And if our shareholders want, we might be able to do more. But this is not the only thing that is going on here. The key thing is that we are going to keep the lead when it comes to climate policies. We took it in 2019, when in the General Assembly of the United Nations in the Climate Summit, I said we are going to be moving away from unabated fossil fuels financing. And this is the big change that took place in 2019, and now everybody is going that direction, and that's good.
So you think Europe has a lead still?
I think Europe has a lead on this, and I think we must work on this lead because the others are not sleeping. And this clean tech is one of the few areas where Europe is still technologically in the lead. So we must preserve and expand that, and that requires a lot of investment.
Is the energy transition going to be inflationary? Francine was just mentioning it. We've just seen some very hot Spanish inflation data this morning. To what extent do you think this transition is going to be structurally inflationary. Structurally, we're going to see structural inflation as a result of it. And what is the best mechanism? Is it loans? Is it subsidies to avoid that happening?
Well, thank you very much for this question, because I was horrified this morning as well when I saw the inflation figures in several European countries. Inflation is returning, and this must be of biggest concern for the central banks. So in order to avoid that, we must move much more towards targeted intervention, targeted support, and not the big water hose splashing water everywhere. That will only fuel inflation, and that is the worst thing that can happen. So we need to see where are the areas of innovative activity where we can support in a targeted way in order to strengthen Europe's competitiveness and our strive for climate change action.
Are loans better as well? Because in some ways, what you do is harmonize credit. Different banks, commercial banks across Europe, lend at different rates. Inflation rates are going higher. That is in some ways widening out that spread across Europe in its various component parts. EIB, one level. Are you therefore able to act as a harmonizer in terms of the ability of the various parts of Europe to be able to make this transition?
This bank was founded in the 1950s, in order to contribute to the establishment of an internal market in what is now the European Union. At that time, European Community for Coal and Steel and Euratom. So this is one of the key objectives of the bank, to contribute to the integrity of the internal market of the European Union. And that makes it necessary to avoid that countries with deep pockets have an edge over those who have smaller budgets.
Do you think that single market is under threat as a result of this?
I think we make sure that it is not under threat, but this needs to be taken care of all the time. Talk to the smaller member states of the European Union. They often complain about the big bazookas that the bigger member states pull out. And this is something where we can be an equalizer.
Absolutely. You spoke a moment ago about the technological advantages that you feel that Europe still has when it comes to green technology. Let's talk about the equity initiative that you are part of, taking equity in scale-up of some of this technology. Should we be alarmed that the biggest kind of scale-up equity fund in Europe is effectively quasi-government? How do we get the private markets in Europe to play a bigger role in this? Because I appreciate what you're doing, but shouldn't others be doing what you're doing?
Well, I'll be happy to see that, and we see it as our role to crowd in the private sector. This is one of the key jobs of EIB. We know that all the big political objectives, strategic objectives that we share in the European Union, all this cannot be reached by state budget money only. We need to mobilize private money, and that means the private sector. And this is why crowding in an institution like EIB is for.
And all of this together, Francine mentioned it in the introduction, this 2% investment gap that exists, 2% of GDP. Can Europe close that, or is that structural?
It looks structural, and this is why we must not let it go. We need to continuously work on this investment gap in Europe, in particular when it comes to technological developments. And this is why an institution like ours is very well prepared to do this.
One final question. We should probably spend a couple of moments talking about Ukraine. As you look at the challenge that seems to grow day by day as a result of that terrible conflict, how are you thinking about how your institution, will play a role in the reconstruction of that country?
When it comes to the reconstruction after a peace agreement, then the big institutions for finance in this world will be challenged. And I think we can do it. I'm a structural optimist in this, because the conditions for a speedy recovery in Ukraine are very good. I mean, Ukraine is far ahead of some parts of Western Europe when it comes to digitalization, for instance. They have very, very well-skilled people. So from that point of view, I'm optimistic. But the key thing is we must not wait until the peace treaty is signed and the ink is dry. We must act now, because every moment we lose in order to support Ukraine on its way towards a peace agreement will cost us dearly afterwards.
Werner Hoyer, it's been great to catch up with you. Thank you very much indeed for spending some time with us this morning. Fantastic event. I very much enjoyed being here, so thank you for inviting us.
Thank you for coming. Great pleasure.
Werner Hoyer, the president of the EIB. Francine, back over to you.
Yeah, with another great interview with our Guy Johnson, of course, looking at the implications of the Inflation Reduction Act in the U.S. Now let's get straight to the Bloomberg First Word News with Samuel Etienne. Hi, Etienne.
Hi, good morning, Francine. After 945 days, Hong Kong is scrapping one of the world's longest mask mandates. From tomorrow, face coverings will no longer be needed outdoors, indoors, or on public transport. The move comes as Hong Kong seeks to attract tourists and overseas workers to revitalize the city. U.S. Treasury Secretary Janet Yellen has made an unannounced trip to Ukraine. The visit, coming a week after President Biden's, is intended to stress Washington's commitment to the country. Both Biden and Yellen have said Washington will back Kyiv for as long as it takes, despite rising doubts among some Americans about the cost of support. And the Adani Group CFO has told Bloomberg the company's fundamentals are solid. As their Asia Investor Roadshow moves to Hong Kong, the event is Adani's latest effort to reassure investors following the Hindenburg Report allegations of fraud, which the group emphatically denies. Robbie Singh told us it's important to answer investors' questions directly.
We have an obligation and duty to face people in an environment like this, and not just simply do VCs and calls, but to actually meet in person and answer the questions in person.
All right, and the reception so far that you've got?
It's very well attended. We will, like we had conveyed, we will meet about 160 of our core investors, and we'll answer questions for each one of them.
That's Global News, powered by more than 2,700 journalists and analysts in over 120 countries. I'm Samuel Etienne, and this is Bloomberg.
Thank you so much, Samuel Etienne, here in London with me. Now, coming up almost an hour into Cash Equity Trading, we'll recap your stocks on the move. This is Bloomberg.
We're investing in a lot of different capabilities and features that makes the in-store shopping experience that much easier, that much more compelling, whether it's price check, browsing inventory in this store, so that we can really make that experience as convenient and as simple as possible.
Convenient, simple, that's sort of what people have needed in the age of COVID. Is that here to stay, or do we go back when finally we all hope that the pandemic will be behind us in some way? Do our changing shopping habits go back again?
What's really interesting about retail in my 20-plus experience is that convenience never reverts itself. Now, the form of convenience has shifted, whereas, say, in 2000 to 2010, a lot of convenience was driven by more stores nearby. Now it's stores in addition to digital. Yeah. There's nothing closer than the phone in your hand.
Welcome back to Bloomberg Daybreak Europe.
Good morning, good morning. This is Bloomberg Surveillance.
Welcome to Bloomberg Markets, trying to open.
This is Bloomberg Technology.
To our television and radio audiences worldwide, welcome now to Balance of Power. This is Bloomberg.
This is Bloomberg. Welcome
Welcome back to the Open, everyone. We are 53 minutes into European trading day. For the moment, European stocks down 0.2%. Now, 1 hour into cash equity trading. Let's recap some of the stocks on the move. We have the big guns out. Bloomberg's Danny Berger is here. And Danny, you're looking at Credit Suisse. Bad news and bad news. And today it's about Greensill.
Yeah, bad news we hoped had disappeared for Credit Suisse. And to one degree, this is the conclusion of that saga in some ways for them. FINMA, the Swiss regulator, has wrapped up that investigation. But the outcome isn't great, saying that they seriously breached risk management obligations. There are more controls put on Credit Suisse. Now they have to do something called a responsibility report, where they put out the responsibilities for their 600 highest ranking employees. But the CEO of Credit Suisse says he welcomes the conclusion of this investigation.
So then, Danny, give us the details after Santander reported earnings.
Right, so they had really strong earnings to start the month. Today was their investor day. They had a slide of that and put out this Credit Suisse, but Santander put out some really strong numbers. So those shares up 1.2%. They're increasing a buyback of 912 million euros. They're also increasing their payout to 50% of profit over the next 3 years. It had been 40%. Of course, a stock I know, Francine, you keep a close eye on.
I do keep a very close eye on that. And Man Group, I mean, those shares have surged today.
Yeah, a really positive story for Man Group earnings. Of course, Luke Ellis, the CEO, was talking to Anna Edwards earlier. 7%, easily the best performing stock on the stock 600 today. They had inflows in 2022. Let me tell you, that was really rare for managers, for hedge funds. Their inflows were 3 billion inflows, rather $125 million is what their buyback will be. And all of their computer-driven strategies were able to boost positive returns last year, again, when so many hedge funds struggled in the difficult environment that was 2022.
I mean, look at that, up 7% for Man Group. Danny, as always, thank you so much. What a pleasure, what a treat on a Tuesday morning to have Danny Berger do your stocks on the move. Now, that's it for the European Market Open. Surveillance Early Edition is up next. We'll be speaking with the chief executive of Suez. We'll also have an exclusive conversation with Eni's chief. He's Claudio Descalzi. The market's definitely focused on inflation. Now, European stocks are slipping. U.S. equity futures also down. Hot inflation reports ramping up the stakes for the European Central Bank's battle against some of this inflationary pressures. Treasury yields in the U.S. also advancing, the 10-year benchmark up more than 2 basis points. Now, the focus, of course, going into a set of data out of the U.S. is going to be what exactly where the price of oil goes. It's set for a 4th straight monthly decline as concerns about tighter monetary policy and swelling stockpiles in the U.S. does seem to eclipse some of the optimism about rising demand in China. So we'll have a full market roundup shortly, and I'm looking forward to that exclusive conversation with the Eni chief executive. We'll talk demand and the price of oil. This is Bloomberg.
Why'd you do this project?
Yeah, YouTube is this kind of a sleeping giant in social media. Someone described it as like this iceberg that no one ever really talks about as much for a variety of reasons. I see YouTube as both the past and now future of social media, and it was the first company to pay online broadcasters and invented the creator economy. And now we're seeing with TikTok, Instagram, Snapchat, are all moving in this direction. Social media is no longer your friends and family and your acquaintances. It is influencers. It is celebrity. It is a game built around commerce. And this is a world that YouTube very much created.
Should we be telling Odd Lots listeners to like, comment, and subscribe? Other podcasts do that.
I mean, it's an effective call to action.
All right, everyone, like, comment, and subscribe on Odd Lots wherever you find it.
This is Bloomberg Surveillance, early edition, with Francine Lacqua.
Good morning, everyone, and welcome to Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. Here's what's coming up on today's program. The UK and the EU sealed the deal. Now the Prime Minister, Rishi Sunak, must sell his breakthrough Brexit framework to sceptical Northern Irish politicians. Traders fully price in a 4% peak ECB rate for the first time after French and Spanish inflation figures come in hotter than expected last month. Plus, oil is heading for a fourth monthly decline with concerns over tighter monetary policy and stockpiles in the U.S. We speak exclusively to Claudio Descalzi, the chief executive of the oil major Eni. Now, first thing is first, let's check in on the market. So we're seeing quite a lot of pressure, not only in European stocks, but also in futures in the U.S. Now, this is on the back of, first of all, a bit of data in the U.S. that showed, well, the economy is a little bit stronger maybe than expected. What does that mean for interest rate hikes? And then we had a hotter than expected inflation data in Spain, but also in France. What does that mean for the ECB? We saw repricing of money markets, but also many questions about some of the refinancing of companies across the board. A reminder, France and, of course, Spain, one of the biggest, or one of the two top four economies in Europe. European stocks down 0.2%, the German 10-year yield at 2.647, and then Brent crude. We have a good conversation coming up on the price of oil with Claudio Descalzi of Eni. A lot of questions actually on stockpiling and going forward, what Europe can do to move away even further from that Russia energy complex. The FTSE 100 down 0.3%. This is all about the Brexit deal. Overall, it won't have huge impact, of course, on this stock market, but this is the main question that we need to try and figure out, whether Rishi Sunak can sell that to his party, the more right-wing party Brexiteers. And then the CAC 40 down 0.2%. In Spain, I'm seeing a bit of a lift, 0.3% higher. Now, the Prime Minister, Rishi Sunak, has made a big step to repair relations with the UK's largest trading partner. But the last hurdle may be the biggest one yet, and that's convincing sceptical Northern Irish Unionists and pro-Brexit Tories to back his new post-Brexit agreement. Now, for more on all of this, we're joined by Bloomberg's UK correspondent Lizzie Burden, who's live from Westminster. So, Lizzie, good morning. Has Rishi Sunak been able to get a better deal than his predecessors?
Well, Francine, as you say, some of that euphoria in markets faded this morning. It was interesting to hear from the Prime Minister on the airwaves this morning saying that, well, touting the economic benefits of this deal. It's something that the Shadow Chancellor Rachel Reeves did on Bloomberg TV yesterday. Has he got a better deal? He says so. He says that he's been able to fundamentally rewrite the Northern Ireland Protocol, for example, by allowing London instead of Brussels to set VAT rates in Northern Ireland. That's something that Brussels said couldn't be done. He's also reduced the amount of red tape on goods going between GB and Northern Ireland by setting up green and red lanes, green for goods staying in the UK, red for goods going on to the EU, but there are still checks. He also, his rabbit out of the hat moment was this Stormont break, allowing the Northern Ireland Assembly to delay or potentially stop the application of EU laws in Northern Ireland. But the ECJ, the European Court of Justice, remains the ultimate arbiter on the application of those laws. So he's got a deal. He had Ursula von der Leyen, the European Commission President, even calling him Dear Rishi. The relations are warmer, but the tensions remain until it passes through Parliament and until power sharing is restored at Stormont.
So, Lizzie, can he win the support of the Unionists and the Tory Brexiteers?
And indeed, they're entwined. In terms of the vote, well, Rishi Sunak has got the backing from Keir Starmer, the opposition Labour leader, to get this deal through, so he should have the numbers, but he needs the DUP on side, and potentially the Tory Brexiters would follow. So in terms of restoring power sharing, Sunak is in Belfast today to try to woo the DUP, and he's also speaking to businesses who he says will practically benefit from this deal. We've heard from Jeffrey Donaldson, the DUP leader, this morning. He says that there are still elements that the DUP needs to engage with the government over, but he sounds conciliatory. That's what's important. And after he spoke in Parliament yesterday, Boris Johnson and Liz Truss didn't have anything to say, nor did any other Tories have much negative to say. So we'll see whether they come out today or whether the DUP says anything more definitive.
Lizzie, thanks so much. Lizzie Burden there with the very latest from Westminster. Now let's bring in Bloomberg's Christina Aquino also to discuss the latest market moves. And Christine, inflation, good morning first of all, but inflation kind of, much higher than expected in Spain and France. What does that mean for the ECB?
Well, Francine, I think that just solidifies the ECB hawks message that they're going to need to keep doing more to address this, right? I mean, we've already heard from Madame Lagarde, again reiterating that 50 basis points in March is very, very likely. We've heard that idea of just the ECB having to keep going on rates being backed by some of the hawkish camps of the Governing Council. So that's going to be interesting. I think, prior to this, we have seen a bit of a debate on the Governing Council between the hawks and the doves. We've seen a few of them, Villarreal coming out and saying that perhaps markets are overestimating the interest rates and how far those could go in the euro area. But after today's data, I think that just blows it out of the water.
Yeah, the problem is the time lag, right? So they've done quite a lot in monetary policy readjustment. So if it's not having an impact, how much more can they do? I know we have that 4% on peak rates.
Absolutely, Francine. I mean, there's definitely on the rate side of things, they can definitely do quite a bit more there because, again, the ECB is one of the laggards when it came to jumping on this rate hiking train that other central banks before it came, like the Fed and even the Bank of England. But then there's also its asset balance sheet, right? And that's still kind of another lever that they can use and hasn't really been in the spotlight as much. Maybe because it's a little bit more boring than rate hikes, but again, it is still a powerful tool, and the removal of that support in the bond market in conjunction with rate hikes could potentially kind of just deliver that tighter monetary policy that they're really going to be looking for at this stage.
Thank you so much, Christina Aquino there with the very latest on the markets. We have many more market shakes throughout the day. Now, coming up, we'll also be joined by Sabrina Soussan, Chief Executive of the French-based utility firm Suez. That conversation is up shortly, and this is Bloomberg. So intimately linked to the future of the UK. What are you seeing when you go to branches and in the country?
Yeah, we're seeing a lot of anxiety at the moment. I think the recovery from the pandemic has been and is continuing to be very strong. So I think we're seeing the economy recover. But with rising interest rates, with inflation. Those are things that, you know, peoples and families and businesses haven't had to deal with for 10 years. So a lot of business owners today haven't had to operate in that environment. So it's causing quite a lot of anxiety, which means, you know, for us, because we're up and down the country in branches and offices, we can spend a lot of time talking to businesses and helping them plan and deal with it. But it is, you know, it's very different, and it's not something people have had to operate in for a long time.
How did Jeff Bezos realize you could sell anything on the internet?
The web was growing at something like 2,300% a year. Anything growing that fast is gonna be big.
Why did Bill Gates create Control-Alt-Delete?
Kind of become the poster child of, hey, couldn't you have made this stuff a little simpler?
And what inspired Diane von Furstenberg to create the wrap dress?
The wrap dress created me.
On the David Rubenstein Show, I uncover the untold stories of the world's most successful leaders, right here on Bloomberg.
Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Francine Lacroix here in London. Now let's get into a conversation about the utility space. We're now joined by Sabrina Soussan, Chairman and Chief Executive Officer of Suez, who joins us now from Paris. Sabrina, thank you for joining us. If you look at the waste and, of course, the transformation that waste and water has gone and changed in the last 10 years, it is really pretty incredible. What more do you need today from policymakers in Europe to do a better job?
So nice to be here with you, and good morning. First of all, so Suez is a global leader in the water and waste management. Yeah, we are a 9 billion euro company, and we are active all over the world in 40 countries. Water and waste, as you said, are in transformation and are still in transformation. I think it's not finished. Yeah? And we have a lot of public customers, of course, also private customers, industrial customers. And what we need from government and regulations, I would say, is to work on regulations. Yeah, if you look at the waste, if you look at recycling, to take one example, when recycling regulation came, especially for plastic, for plastic bottle, we see an economic case in order to work on recycling. And working on recycling is saving materials and is doing something good for material scarcity that we are seeing now. Another topic maybe is energy on the waste. Yeah, with waste we produce energy. And energy, as we saw in the past months, is key for independency. And waste is a way, of course, also to produce local energies. Yeah. And the government can help us also in this field.
I mean, a lot of the heads of state of European countries look at the U.S. and say, look, the Inflation Reduction Act is something that we needed. We could have better waste and new clean energy if we also gave subsidies. Others are saying, look, this is an unfair competitive advantage. Do you think Europe should do the same?
I think that, policies are here also to help us to work on energy transition. And if you think about, again, the example of energy from waste, it's renewable energy, yeah, and it's independency also. It's both. Yeah? And pushing on this will help us to be more independent and to have less fossil energies. So I don't think it's unfair, because I think at the end of the day, it will help us to develop our economy in a better way.
Sabrina, when you look at water and the fact that you provide, I think, about 66 million people with drinking water services that are operated by Suez, can you increase that amount when you look at some of the disasters, in various different regions and some of the concerns about clean drinking water? How much more households can you access?
Yeah. I think we have two things. Yeah, we have a focus on developing countries. Yeah. And a focus on developed countries. On developing countries, we can do more, yeah, and we can do more if we have more also financing and bankable projects in some countries, and we are working on this with some institutional organizations, so big banks, World Bank, for example, this kind of organization. But also, if you look at our developed countries, today we realize that water is very precious, and that we might have an issue of water quantity very soon, and we already have in France, for example, and in many other countries. And we realize that we need to do something. And we have solutions, we have technical solutions. Yeah? We are able to make sure that to reduce the amount of water consumed, and that's an important part. How can we have some measures in order for the end consumer to reduce their water consumption? That's one part. The leakages, you know about leakages. 20% of the water in France and in many other countries is lost. Yeah, and it's really a pity to lose water in leakages. Yeah? Yeah. We can work on reusing water, reusing water which is treated. Yeah?
But Sabrina,
and we can, sorry.
On the water, I mean, certainly here in the UK,
I wanted to add one point, maybe.
Yeah, go ahead.
No, I wanted to add the point also on bringing more water. For example, desalination is a way also to produce more water, more drinkable water, with the resources that some countries have from the sea.
Yeah, you made a very good point on wasted water. And certainly here in the UK, you had a scandal about wasted water because the pipelines just wasn't closed. I mean, if you were to resanitize the pipes or to make sure that no water is wasted, how much would that cost?
It's difficult to say. In France, we estimate that there is an additional need of investment of 15 billion euro over the next 5 years, so 3 per year, not only for networks, but also for investment. For example, it's not only about network, it's also about digitalization. How you can make sure that you identify quickly where the leakages are, and then you can be much more efficient if you can target the areas where the leakages are. And we have digital solutions with a lot of sensors who make possible to spot these leakages and act. Yeah? And then you will have a better use of the investment that you do. So that's not only network, it's also digitalization. It's also technologies, like I mentioned, reutilization of water. In France, for example, we reutilize only 1% of the wasted water. And in some countries like Spain or Italy, it's up to 15%. But Israel is doing more than 80%. Australia the same. Yeah, so these are the technologies who are available, but we need to use them and to invest in these technologies.
Sabrina, talk to me a little bit about some of your green bonds. So I think you had 2 issuances in 2022. So one in May that was worth about 2.6 billion euros, and then 1.7 billion euros in October. What's coming up in 2023?
Something will come up because we want to refinance our debt. And as you know, we invested in the UK, in a UK waste company, one of the biggest company in waste in the UK. So something will come up at some point. We haven't decided when. But what is really key and interesting is this first bond, the 2.6, was one of the biggest bonds in Europe, the second largest, and it shows the interest that the market has in the kind of company like us where we have a green portfolio.
Sabrina, thank you so much for your time today. Sabrina Soussan, the Chairman and Chief Executive Officer of Suez. Coming up, a new Bloomberg report finds bank financing of low-carbon energy deals still well below what's required to avert a climate crisis. We'll have more on that next, and this is Bloomberg.
Solar energy, wind power, battery-operated cars. The transition from old to new energy forms has investors placing bets on which technologies will come out on top. Bruce Flatt's Brookfield Asset Management sees what it calls massive opportunities. Its new impact fund raised more than $15 billion, and Flatt says it could have raised more. The fund has two targets: companies that need to dramatically curb greenhouse gas emissions, like power providers, and those that are in a position to dominate in clean energy. Brookfield hired former Bank of England Governor Mark Carney to strengthen its environmental, social, and governance investing. In March, Australian utility AGL Energy shot down Brookfield's takeover offer. The firm had aimed to accelerate AGL's transition to net zero emissions by over a decade. Carney signaled that this was no problem. He says Brookfield is reviewing at least 50 potential transactions across a range of industries.
Enjoy the excitement of a night of music at Boston Symphony Hall with BSO Now. Watch brand new Boston Symphony Orchestra performances, behind-the-scenes storytelling, and memorable archival concerts, all from the comfort of home. Use our free 24-hour trial and see why the Boston Globe calls it musically rewarding. And the Berkshire Edge says the orchestra has never played better. Visit bso.org/now, where the music plays on. BSO season sponsored by Bank of America.
Economics, finance, politics. This is Bloomberg Surveillance Early Edition of Francine Lacquet here in London. Now, a Bloomberg new energy finance report has found that banks need to make a greater pivot to low-carbon financing to avert a climate crisis. The report actually shows that at the end of 2021, banks were still underwriting fossil fuel energy deals at a higher rate than low-carbon alternatives. Now, progress made to date is not enough for the planet to reach the goal of net zero emissions by mid-century. Now, for more, I'm joined by Bloomberg ESG and climate reporter Alistair Marsh. Alistair, thank you so much for joining us. So just how far are banks from what is needed on climate change?
Hi, good morning. Well, they are a long way off. I mean, the report today is really interesting because it gives us a new yardstick for measuring progress. Thus far, we've just been able to talk about kind of absolute numbers of financing of fossil fuels, which we kind of know is contrary to what's needed for getting to net zero emissions. But actually what the BNEF report shows is that we need to not just phase out or phase down fossil financing, but we also need to massively, massively ramp up the financing of clean energy. So today we have a ratio in the economy of about 1 for 1. So $1 of investment in or financing of fossil fuels. We have that, and we also have at the same time $1 of financing of clean energy. And actually that needs to go from 1 to 1 to 1 to 4. So we need to have, or 4 to 1 in terms of we need to have 4 times as much investment and financing going into renewable energy. And we're way off track today. The report suggests that currently we're 1 to 1, and across the banking sector, the picture is mixed, but most of the kind of globally systemically important banks, those who have the biggest energy businesses, are frankly way off target.
So, Alistair, which banks are the best positioned and which are actually the worst?
Well, amongst the kind of biggest financiers of energy, so there are a couple of kind of niche or smaller banks that have a kind of more of a greener footprint, and they might be doing better. But in terms of the banks that make the biggest impact on the global economy, like the globally systemically important banks, we have JP Morgan, which has a ratio of 0.7, meaning that for every $1 of financing to fossil fuels, only 70 cents goes to clean energy. And that's actually not the worst. They are the biggest energy bank overall, but actually the worst is amongst the top sort of 10 energy financing banks would be Wells Fargo at 0.4, and also Royal Bank of Canada at 0.4. We have actually in Europe, amongst the top 10 again, the best is actually BNP Paribas at 1.7. But that even that is not that great. We're still a long way off from the from 4. And actually BNP Paribas itself is facing a legal challenge in a French court over its, from some NGOs saying that they're not doing enough to deliver on their climate targets. So it's a pretty dire picture overall, I'd say.
Okay, pretty dire. So hopefully they'll do better newsletter. Thank you so much, our Bloomberg ESG and climate reporter, Alistair Marsh. Now let's get straight to the Bloomberg First Word News. Here's Leanne Gerrans. Hi, Leanne.
Hi, Francine. After 945 days, Hong Kong is scrapping one of the world's longest mask mandates. From tomorrow, face coverings will no longer be needed outdoors, indoors, or even in public transport. The move comes as Hong Kong seeks to attract tourists and overseas workers to revitalize the city. Now, Fed Governor Philip Jefferson is warning against changing the U.S. Central Bank's 2% inflation target. He believes altering it could destabilize what he describes as well-anchored inflation expectations and called into question the Fed's comments and commitment to its goals.
I am committed to lowering inflation to our 2% target. Changing the FOMC's longer-run inflation objective, however, would introduce an additional risk by calling into question the FOMC's commitment to stabilizing inflation at any level, because it might lead people to suspect that the target could be changed opportunistically in the future.
And U.S. Treasury Secretary Janet Yellen has made an unannounced trip to Ukraine. The visit, coming a week after President Biden, is intended to stress Washington's commitment to the country. Both Biden and Yellen have said Washington will back Kyiv for as long as it takes, despite increasing skepticism in America about the costs for the support. Global News, powered by more than 2,700 journalists and analysts in over 120 countries. I'm Leanne Gerrans, and this is Bloomberg. Francine.
Leanne, thank you so much. Now let's talk about inflation. Actually, let's talk about expectations for European Central Bank. European stocks slipping, euro area bond yields actually surging on that hot inflation report, ramping up the stakes for the ECB to battle some of this rampant price pressure. 2-year bond yield jumping 9 basis points after the inflation data. I have to say, the concern is actually that because of the latest set of data, they're likely to harden the resolve of central banks to keep ratcheting up rates to diffuse this still hot inflation, and that will hurt some pretty resilient economies. Coming up, we're joined by Claudio Descalzi, the chief executive officer of Eni, one of Europe's largest energy companies. We'll talk about the price of oil, we'll talk about the energy transition and everything in between. We'll also talk about the recent earnings, its future outlook, and the global energy complex. This is Bloomberg.
I've always been a person who's just been attracted to hair. I like to sit and think and theorize how I can manifest these visions that I have for braiding, and how I can take something that may seem like it's a line drawing in my mind and apply that to someone's scalp.
We are the only culture that has hair that grows out of our head the way that it does. Anyone from the African diaspora is born with this amazingly curly hair that can be shaped into a variety of different ways of expression.
I want Black people to love themselves for how they naturally appear, and also to appreciate the cultural practices such as braiding that our ancestors have practiced for centuries.
How did Jeff Bezos realize you could sell anything on the internet?
The web was growing at something like 2,300% a year. Anything growing that fast is going to be big.
Why did Bill Gates create Control-Alt-Delete?
Kind of become the poster child of, hey, couldn't you have made this stuff a little simpler?
And what inspired Diane von Furstenberg to create the wrap dress?
The wrap dress created me.
On the David Rubenstein Show, I uncover the untold stories of the world's most successful leaders, right here on Bloomberg.
Why do the biggest names in business choose Bloomberg?
That is a great question.
It's a great question.
Great question. Great question. Best question I get all night.
Bloomberg, top experts, great questions.
The UK and the EU seal the deal. Now the Prime Minister Rishi Sunak must sell his breakthrough Brexit framework to skeptical Northern Irish politicians. Traders fully price in a 4% peak ECB rate for the first time after French and Spanish inflation figures come in hotter than expected last month. Plus oil heading for a fourth monthly decline with concerns over tighter monetary policy and stockpiles in the U.S. We exclusively talk to Claudio Descalzi, the chief executive of the oil major Eni. Well, good morning, everyone, and welcome to Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. So, like many players in the oil and gas industry, Italian giant Eni benefited from surging prices due to Europe's energy crisis. Last week, Eni posted a record profit for 2022, despite reporting fourth quarter results that missed some estimates. However, market reaction to those results was pretty mixed, with the stock down as investors digested higher capital spending and a lower buyback than previous years. Well, I'm exclusively joined by the Eni chief executive, Claudio Descalzi, for a comprehensive conversation, actually, of the oil major's future, but also the energy complex overall. So, Claudio, thank you so much for joining us. Let's start with your strategy. You gave a 3-year plan to investors, and there were changes in how you view, I guess, the metrics in terms of energy complex, especially in terms of dividends. Is there something that the market's misunderstood?
No, I think that, we changed a lot of stuff because we changed our dividend policy. We made it simpler because it's a portion is 25-30% of the CFFO, and then we gave also the share buyback that is 2.2 billion up to 3.5, and then we talk about the investment. So we got a lot of pieces of information. Now we are in roadshow to go deeper in the information in the stock recovering.
But so why change the dividend policy to cash flow instead of focusing on oil price?
The reason is why we are a different company. In the last 3 years, after 9-year work, we have upstream is a big lag, but now we have other businesses like Plenido, that is retail, renewables, EV charging. Then we have sustainable mobility, and we have the GGP, so the gas business. All these businesses are very positive, so they are giving a contribution, and all the renewable parts and the sustainable mobility, so the green, the biorefineries are not linked to the oil price, and also the GGP is not linked to the, is more commercial to the oil price. It's linked to the upstream that is backing it. So it's much more now better to talk about all the business together. So we talk about the CFFO that represent the real situation of the company.
Claudio, talk to me a little bit about how the energy complex has significantly changed since the war in Ukraine started and how it will continue to change. So you, of course, have gone south to Africa to try and find replacements from some of the energy that used to import from Russia. How will that, change and evolve in the next years?
It's evolving. I think that is going to take about 2-3 years, at least for the south of Europe, to be able to replace completely the Russian gas. So what we are doing, so we are covering completely our customers, our activity, because we consume a lot of gas in refinery and in chemicals, and we are covering all our retail, B2B and B2C. Now we are bringing additional gas to secure Italy. And then for Europe, especially Germany and Holland, they've been very fast to put in place the new regasification plant. Really good job. But now you have to replace, find also the gas. The gas is, we have at least 60, considering that 60 billion cubic meters coming to replace partially Russian gas, we have still other 60 billion cubic meters to replace, because last year we had Russian gas until July, about 80%, then they decreased, and now practically is zero. So now the big challenge starting from March is really to be able to find the gas that we really need to replace it 100%.
Where do you see the price of gas, and where do you see the price of oil going?
So the price of gas in oil, what we have now is not really representative of what we are going to have when the driving season starts. The weather is okay, but also this season is always quite flat or down in terms of commodity price. So we think that the oil price this year can range between $80 and $85, considering that China is going to recover. And the gas now is very down, but I don't think that it remain at this level as soon as we have to start to fill our storage facility in Europe, and China is going to restart. So I think that the price now is $14 per million BTU, more or less 15 in Europe. I think that could be about 20, 22, 24, 25. That could be, and then maybe higher in the peak season.
Peak season. So to what kind of level? Or like peak could be even 28?
I think that could be reached around 30, but it depends if we are able to find the gas, and we have to consider efficiency, because this year overall I think that 15% of we reached 15% of efficiency. So if we are able to keep this kind of efficiency plan, so reduce the gas consumption and use other kind of, unfortunately, fossil fuels, because we know that renewable are not enough to replace gas, maybe the price can be lower.
How does it feel to be an oil major today? So you're making a lot of money because of fossil fuels. But at the same time, you're telling investors you're doing the transition. How do you marry the two?
So clearly, that is a discussion we have with our investors, not just during the strategy day, but we built a model to be ready to invest and grow in the energy security side, but also continue to be strict on our targets on the emission side. That is a must, because now we are in a volatile situation. But for the future, we need really to replace hydrocarbon and have a diversified energy mix.
But the U.S. have gone all guns blazing, right? They have the Inflation Reduction Act, and that's really helping renewables. Should Europe do the same?
I think that, you must have money to do the same. And Europe has spent a lot of money for COVID, now the war, and the tax margin that Europe has respect to the U.S. is little. So Germany is in good shape, but the other countries has a big debt. So I think that Europe is doing a lot. I think that we have to be focused on energy security, because it's clear. I think that is good what Europe did on and pushing on target for the environment, so for the climate change is absolutely good. But we have to remember that we have other variable, and the energy security is variable, but also the competitiveness of our industry.
But so you're telling me that you don't think Europe can afford an Inflation Reduction Act?
I think that we have the other subsidies or incentives in Europe that we gave that are covering the green area, and are covering also other health and other areas in industry. So Europe and all the countries in Europe are given help. But Europe is in a different situation, because it's not just the the IRA that is different. We pay the energy, now is the gas price is $2 per million BTU. We are 14, so 7 times. And we have the ETS, so the tax that is more than 100 euro per ton on the CO2. So we have a lot of different components that are really heavy on us. For that reason, I said we have also to consider competitiveness of our industries, energy security, competitiveness, and that be very good on the environmental side.
All right, thank you so much, Claudio. We'll talk also a little bit about inflation and what that means for some of the projects longer term in terms of investments. That's the NE Chief Executive Officer, Claudio Descalzi. He stays with us. Plenty more to talk about ahead. This is Bloomberg.
Why'd you do this project? Yeah, YouTube is this kind of a sleeping giant in social media. Someone described it as like this iceberg that no one ever really talks about as much for a variety of reasons. I see YouTube as both the past and now future of social media, and it was the first company to pay online broadcasters and invented the creator economy. And now we're seeing with TikTok, Instagram, Snapchat, are all moving in this direction. Social media is no longer your friends and family and your acquaintances. It is influencers. It is celebrity. It is a game built around commerce. And this is a world that YouTube very much created.
Should we be telling Odd Lots listeners to like, comment, and subscribe? Other podcasts do that.
I mean, it's an effective call to action.
All right, everyone, like, comment, and subscribe on Odd Lots wherever you find it. Economics, finance, politics. This is Bloomberg Surveillance, early edition of Francine Lacqua here in London. Now, still with us is the NE Chief Executive Officer. He's Claudio Descalzi. Mr. Descalzi, thank you so much for joining us. Now, we're having a robust conversation on the Inflation Reduction Act in the U.S. Talk to me a little bit about inflation in general. So we had, the French inflation, Spanish inflation today in the Eurozone. Does it make it more difficult to do some of the green projects, offshore wind projects, that are very capital intensive to start with in this kind of environment?
I think that inflation and the supply chain are not really impacting the green side, also in terms of delay, but it's more impacting in the upstream that is more capital intensive. So we had in 2022 an average of 10% of inflation. Now we think that we consider that we can have about 4 or 5% in 2023. We had a lot of means to reduce through contract and renegotiation. So I think that in our company we have been able to get 7% or more. They're already embedded in our plan, in our capital investment plan.
Talk to me a little bit about capital expenditure. So this is one of the questions that I know investors ask you about, right? Because you're spending more than they were expecting. Can you define that for us? Why are you doing that?
First of all, we talk about 2023. That is a year. So this year, more means the expectation was 8.5, 8.6 billion. We are spending, proposing 9.5, 1 billion. 50% is due to forex and so exchange rate and inflation, and the other 50%, 500 million, is due to project with a very fast track, good time to market in Congo, LNG, to bring gas to Europe, so energy security, and then the big project Baleine in Cote d'Ivoire that we start now, but both of these, the two projects are going to deliver production at the end of 2023. So the time to market is
so it's a fast turnaround.
It's fast and get back return about more than 20%. So it's a matter of understand what is happening. From one side, you know very well, we had a shift, and in the investor side, they say you have to invest in our upstream because we need more energy. They invest more, but they are scared that could be impact the dividend. But we changed the dividend policy, and we put at the level of CFFO, so before capex. So that is not impacting.
Frustrated. I mean, is there something that shareholders don't quite understand about your strategy?
No, I'm not. No, the strategy was clear, not frustrating. I think that I don't like fashion and trends and jump from one side to the other side. Yesterday, all your money in the green stuff. Today, all your money in the oil and gas. So I think that when you lead a big company, it's a big company with a lot of responsibility in-house with your people, but also with about 64 countries. You have to be
strategic,
strict to your strategy, because you start moving around. Inside the company, nobody understands what you are doing. Outside the company, it's the same, and it's a mess. So we have to be able not to be pushed by fashion and trend to do the wrong things.
I like that. I like that a lot. It's execution that's the most important. Claudio, talk to me a little bit about Russia revenue. So we've put huge sanctions on Russia. Are you surprised at the way that they managed, to do this financial engineering or to sell products elsewhere?
No, I'm not surprised, because you have to think that a few years ago, 7 years ago, I don't remember, when they really laid down a pipe for 40 billion cubic meter to China.
Yeah.
I think that is also understandable, because China, India represent 3 billion people, good market. In 20 years, 4 billion people, that is the future. And clearly, Russia has a lot of energy, but not so big market. And there they have a big market but no energy. I think that the business combination is clear. It's due to the war, it's due to the fact that the market is very strong, is there. Europe has a big market, but we don't have energy. So that is the problem that we have to solve.
Do you think that Europe will manage actually were we just lucky because we didn't have a very cold winter? Or do you think Europe is really on a better footing?
No, it's not just an issue to be lucky, because I think everybody worked a lot to be able to fill the storage facility at a level of more than 95%. That is not to be lucky, that is work, investment, understanding of the market. So Europe did very well, but we have to consider that we still had Russian gas. Now the situation is completely different. You start from scratch. Without the Russian gas, we have to fill this storage at the same level. So the mild weather can help for some months, but if you don't have the storage facility there, also with the mild weather, you have to produce a lot of gas. So I think efficiency from one side and a big geographical diversification. Europe has a big opportunity. Africa has energy, and they need investment, but they need a different kind of collaborations. It's not easy for Europe to move to Africa. Europe is not a country. It's not a federation. It's a lot of different kind of states that work together with the same objectives, but with a different energy mix and sometimes different kind of target. So it's not completely easy. And the understanding of Africa is not pretty easy. So I think that for Europe is crucial, critical, to find this energy and to give in return something more important to Africa. They have to put Africa first.
Claudio, thank you so much for a fantastic conversation. That was Claudio Descalzi, the Eni Chief Executive Officer. Now, coming up, we're also joined by the Telia President and Chief Executive Officer, Alison Kirkby, live from the World Mobile Congress in Barcelona. That interview is next, and this is Bloomberg.
you're so intimately linked to the future of the UK. What are you seeing when you go to branches and in the country?
Yeah, we're seeing a lot of anxiety at the moment. I think the recovery from the pandemic has been and is continuing to be very strong. So I think we're seeing the economy recover. But with rising interest rates, with inflation, those are things that peoples and families and businesses haven't had to deal with for 10 years. So a lot of business owners today haven't had to operate in that environment. So it's causing quite a lot of anxiety, which means for us, because we're up and down the country in branches and offices, we can spend a lot of time talking to businesses and helping them plan and deal with it. But it is, it's very different, and it's not something people have had to operate in for a long time.
Lisa, you've got to explain this one to me. What does it mean when the White House says we're watching markets carefully?
It means they have a Bloomberg.
I've seen the Bloomberg.
They have.
I've been in and seen it.
Lots of Bloombergs. Lots of Bloomberg. Lots of Bloomberg. Lots of Bloomberg. Lots of Bloomberg. Lots of Bloomberg.
I've seen the Bloomberg. I've seen the Bloomberg. I've seen the Bloomberg. I've seen the Bloomberg. What does it mean? What does it mean? What does it mean? What does it mean? What does it mean?
It means they have a Bloomberg.
Welcome back to the European Market Open. I'm Tom McKenzie in Barcelona at the Mobile World Congress. It is the world's largest telecoms and mobile conference, happens every year here in the city of Barcelona. Very pleased to say I'm now joined by the CEO of Telia, Alison Kirby. It is the Nordics and the Scandinavians, one of the biggest telecom companies in that region. Alison, thank you for joining us. Let's get a sense then from you. The macroeconomics, obviously a big topic of discussion. We've heard from executives here about concerns about input prices, labour costs, a slowdown in the economy, but there's also been some modest optimism. When you look at the retail part of your business, what is the consumer behaviour change that you're starting to see?
Yeah, the retail side of the business is holding up very well. Obviously we've had all the same input pressures everybody else has had, but, our consumers need to be connected. They need safe, secure, reliable connectivity to run their lives, and we actually haven't seen any real impact as we closed out last year and as we've gone into this year.
Does that allow you then to continue pushing prices up this year, and to what extent?
Absolutely. We have been taking a number of pricing moves. We're, trying to price in line with inflation where we can, but taking a number of moves during this first quarter. And so far, the consumer hasn't given us any sort of backlash. When they're seeing 10, 15, 20% pricing in their food and their shopping baskets, when we give them 5 to 10% on connectivity, there doesn't seem to be any backlash yet. So we're holding up well, the consumer.
You at Telia, you're in the process of a major restructuring. Part of that does include headcount reductions. And you talked about a cut of about 1,500 jobs this year. The last time we spoke to you, you are not unique in this. Other businesses as well scaling down headcount. Does that 1,500 number stay? Is that enough around the costs? Are you looking at further reductions? And if so, where?
No, that's currently the plan for this year. When we embarked on our journey, we were, we're about a 20,000 workforce across the region, and we said we'd reduce about 1,000 a year. And this year we said we'd go up to 1,500 a year as we further simplified our product portfolio and moved to more automated processes internally. So no, we don't expect to do any more than the already announced.
Is it a specific or sector-specific issue, the job cuts that we're seeing, or is it about the macroeconomics?
We need to modernise as a company. We needed to massively simplify and get rid of complexity in how we operated. So as we embarked on this, it was we need fewer products, fewer platforms, fewer services, but better products and services. And we need to work with fewer partners, but in a more strategic way. And that's what's delivering.
Talk to us about the enterprise opportunity for Telia.
We have now, after 20 years of decline in Sweden, we have returned our enterprise business to growth. And actually we saw all of our enterprise businesses growing last year. I think what you're now seeing is a real sweet spot of the green transition, the digital transition, and the need for more safe and secure networks is a sweet spot for Telia because we are that digitalization partner of choice, and that has returned our business to growth.
Finland and Sweden, obviously major markets for you. Both countries now saying they are going to join the NATO alliance. Talk to us about the security implications. You run crucial and critical infrastructure in those nations. What are you doing? What is the demand for security as you face up to those threats?
We have been the partner to the security services across our region for many, many years. And as they prepare to join NATO, we are enhancing those services for those partners. And we're using the likes of 5G and private networks to create new, unique private networks. For example, the Norwegian Ministry of Defence. So there's new growth opportunity there that's been accelerated by the war in Ukraine and now the joining of NATO.
Building out that security infrastructure. Alison Kirby, CEO of Telia, thank you very much indeed. On the strength of the retail part of the business, the consumer still holding up, the opportunities around enterprise, and of course that focus on security. Francine.
Thank you so much for a great interview, our Tom McKenzie there at the Mobile World Congress in Barcelona. Now later today, we'll be speaking exclusively with the Santander Executive Chair, Anna Botin, at 3 p.m. London time. We'll also be speaking to John Waldron, President and Chief Operating Officer of Goldman Sachs. That's at 5 p.m. London time. We'll be at the company's headquarters for Goldman Sachs' Investor Day. So we have plenty more interviews throughout the day. Don't miss them. This is Bloomberg.
So the inflation environment has been changing a little bit. Inflation's been very low for 25 years. Now people think inflation's coming back. How are you going to deal with that?
I think many of the tools that we've historically used to battle inflation no longer work in the same ways they used to. I think people oftentimes thought of housing as a way, or especially retail and real estate as a way to hedge against inflation. Less and less possible the way we've invested in it. I think commodities similarly have been thought of as a way to hedge against inflation. There are challenges over the long term. Equities have been a hedge against inflation. We will continue to do what we have done in the past, which is build a diversified portfolio where there are many different opportunities that have the possibility of hedging against inflation, because different types of inflation have to be hedged in different ways. So if it's a very quick increase of inflation as opposed to a slow rise of inflation, is it temporary? Is it a long and a persistent type of inflation? So for us, I never model myself an economist that can predict where inflation is going. And so what I need to do is build a diversified portfolio where there are different options that can fight the different types of inflation, and to pay close attention to it. And you know, fundamentally, it's done through the equity markets.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
DOJ or other authorities.
Could face bigger challenges next.
Was going to keep rain World Cup. This is a 3.
As the economic picture does.
Is it the OK's getting ready to make
February has seen a transition in the market narrative towards, you know what, it's a bit too hot to ignore when it comes to inflation.
We're going now into a period that I think will last probably the rest of the decade, frankly, with inflation in the 2.5% to 6% type of range. That creates economic uncertainty, creates economic volatility, and that creates dispersion.
We are not in reflation. We're much closer to stagflation. We are not in the roaring 20s. We're going to be in a slower growth environment with a lot of particularities that we have not seen in the past.
This is Bloomberg Surveillance, Early Edition, with Anna Edwards and Matt Miller.
It's 10 a.m. in London, 5 a.m. in New York, and 6 p.m. in Hong Kong. Our top stories today. A surprise jump in French and Spanish inflation this month. That will boost the pressure on the European Central Bank to deliver more interest rate hikes. Switzerland's banking regulator comes down on Credit Suisse over the Greensill Capital's supply chain financing affair. The bank was accused of seriously breaching its risk management obligations. And the annual Mobile World Congress puts the spotlight on new technologies and global security. We're live in Barcelona with top executives from Lockheed Martin, Orange, and HTC. Welcome to Bloomberg Surveillance Early Edition. I'm Anna Edwards in London with Chrissy Gupta in New York, in for Matt Miller today. Chrissy, welcome to the program. Inflation, really the talking point of the markets when it comes to the macro picture here in Europe. The French and Spanish detail to focus on later, but this is a global theme, of course.
It really is, and you can already see it really affects sentiment here in the States. This idea here that when you are looking at more hawkish sentiment, not just from the ECB, but what the Federal Reserve actually learns from the ECB. If you were looking at that kind of re-acceleration of inflation, it is a global story, to your point, Anna, which then creates a little bit more incentive for the Fed to lean hawkish. So we're talking about 50 basis points. At what point does that conversation get closer and closer to a 6% terminal rate? And I think it's that idea that's pushing futures even just marginally lower. Look, volume is thin right now. It is still early. We're only down 0.1%. But to your point, the sentiment could really change and accelerate as we get closer to the opening bells stateside. The two-year yield, though, the bond market is what I really want to keep your eye on because, you know, I put the currency on here. I looked at the dollar a little bit. It's not doing a whole lot. But the two-year yield inching closer and closer to that 5% level. And that is crucial as we talk about maybe not a 5.5% peak policy rate, but even a 6%, that kind of getting into the discourse. And that's going to push that two-year yield even higher. 480 on the front end of the curve, higher by only 2 basis points. But once again, give it time. Let's see what the trade unfolds. Going further out, you're looking at 10-year yield, 394. The round numbers are key here. If we're looking at 5% on the two-year, look at the 4% on the 10-year number, still higher by 2 basis points there as well. And of course, we can't forget NYMEX crude and trading at about a 76 handle. The only spot I have to say cross asset where you see a little bit green on the screen. And I also want to really quickly, oh, sorry, Anna, before I throw it to you, I want to quickly talk about the Asian session as well. And this is really important because there's a lot of the sentiment here is coming from Asia, a little bit of tech outperformance. You are looking at the MSCI Asia Pac Index down about 0.4%. This is important as we talk about that regional story, but outperformance in tech, outperformance when it comes to semiconductors specifically. And you can see that in the Shenzhen complex, closing at about 0.8% higher. Look to India, though, for a lot of that volatility. The Adani story really affecting sentiment there as well, down about 0.5%. And as we look at the currency story, Anna, dollar yen, 136. A little bit of strength in the greenback, but what day isn't when you look at the Japanese yen?
Okay, Chrissy, with the pre-market there in the US and, of course, importantly, the Asia market update. Let's get to Europe then. This is what we see on European stocks. Pretty negative, actually, particularly the London market, down by 0.4%. Perhaps off earlier lows a little bit on some of these markets, but broadly speaking, most sectors have been in negative territory for much of this morning. And it's the inflation conversation that has knocked sentiment, pushed yields higher, knocked sentiment towards risk assets that's really to the fore. That said, if we're talking about higher inflation, if we're talking about higher interest rates, then perhaps maybe that does well for banking stocks. And so banks have been doing okay this morning. Some of the banking stocks going higher, Santander in particular, one of those. I know we'll be speaking to the management of Santander a little bit later on today, and the conversation there is about return of cash to shareholders. Man Group in focus here in London has been up as high as 10% on the back of not an outflow in the fourth quarter, but an inflow for the largest listed hedge fund, listed here in London, of course, and so that inflow in the fourth quarter really welcome by investors. Also talking about the inflation picture and how that plays out globally, but crucially for their business as well. Here's the Bayer share price down by 4.7% on this business, operates in healthcare, pharma, and also agriculture, crucially. They came forward with numbers that disappointed the markets in terms of the outlook, a lot to do with costs there. And here's the inflation story pushing yields higher. This is something that's been developing through the morning. We got the French numbers, and that sent yields higher, sent the euro a little bit higher, but not too much. Then we got the Spanish data, that sent yields even higher in Europe, and did push the euro back up a little bit. So a fast-moving story when it comes to inflation, but certainly really in focus, Chrissy.
It certainly is, and something that's really moving the markets around the world as we're seeing. We're going to have much more ahead on those inflation surprises, but for now, let's go to Barcelona, where global executives have gathered for the annual Mobile World Congress. Bloomberg's Tom McKenzie is there, the CEO of Lockheed Martin. Tom.
Yeah, very pleased to say that I am joined now by Jim Taiclet, who is the CEO of Lockheed Martin, the world's largest defence contractor, of course. Really looking forward to this conversation. Jim, thank you for joining us. What is then the world's largest defence contractor doing at the world's largest telecoms and mobile conference?
Well, Tom, good morning, first of all, but we're driving a concept that I'm trying to introduce into the whole defence enterprise, meaning government, Congress in the U.S., parliaments around the world, military services, and all of industry to create a 21st century security capability by driving digital technologies into national defense, into space exploration, and into climate protection, for example. That's what we're here for. We're trying to work more and more with the telecom and tech industry to advance that.
How recipient is that industry to that proposal, and what is the catch-up that you need, your industry needs, and how much of this focus is going to be on artificial intelligence?
There's been incredible uptake of the leading tech and telecom companies all the way through the industry down to startups to work with us for a couple reasons. One is the mission is a mission for everyone, which is to basically increase our deterrence to conflict and try to prevent war and any potential adversary from feeling that they can act aggressively and succeed. So there's a shared interest around the world and across industries on the mission, but there's also mutual learning that comes back and forth. In aerospace and defense, in our industry, we're very capable in areas like cybersecurity, in resilient communications, etc. And there are a lot of lessons to trade back and forth. When we think about Internet of Things for the future, autonomous cars, for example, you're going to want secure communications. You're going to want cybersecurity. You're going to want to prevent hacking of those systems. So we're working with some of the largest, and then all the way down to the startups in both industries, telecom and tech.
And Jim, of course, look, this time last year, Russia invaded Ukraine. Some of your systems have played a crucial role in Ukraine's defense, the HIMARS system, the Javelin. Are lawmakers in the US right? Some of them have flagged this as a concern. Are they right to be concerned about the dwindling stockpiles, inventories in the US? Is that a valid concern?
It's valid, but being addressed. So what we've advocated with in partnership with our government and Congress is to create new purchasing authorities so that we can have multi-year purchases of these important and critical munitions, for example, to have faster development cycles for contracting. It's just sort of the blocking and tackling that says, we've got to increase our speed in national defense, both on the digital world side and the physical world side. And we're working with government closely on both of those.
And Lockheed Martin has pointed to a $1.5 billion order, I believe, for Ukraine for 2023. Can you give us some clarity on what weapon systems that might include, that amount?
So the U.S. government actually creates the policy for what can be, sort of provided to our allies. But, obviously, HIMARS and Javelin are a big part of that package. They were instrumental in the ability of the Ukrainian people to defend themselves against attack. And now we're advancing with some longer range ammunition, missiles, etc., to help them stave off any further destruction. So we're working with U.S. government for our allies beyond Ukraine, across Eastern Europe, etc., to make sure we all have what we need and can produce what we need to try to prevent this war from expanding.
Do you anticipate further orders for Ukraine this year?
Well, again, it's up to the U.S. government to make those policy decisions. But beyond Ukraine itself, all of our NATO allies and the U.S. are providing supplies to Ukraine. Those stockpiles, as you pointed out, they need to be backfilled. And some countries, such as Poland, have identified that maybe the risks and threats are higher than they thought before, and they want to increase their capabilities in some of these arenas. So I do think there's going to be some robust ordering for these kinds of systems, because the world is recognizing that, you know, being able to defend yourself is a higher priority based on the necessity of the day.
When does production get back to full throttle?
Well, we're on full throttle for peacetime production today. The issue is we need to build in anti-fragility into our system, meaning if all of a sudden, as we have gotten, a request to double production with no notice, that shouldn't take the industry 2 to 3 years, as it does today, because we are geared and funded for peacetime rates of production. We need to put some anti-fragility into the system to say, if we need a double production, what are the low value or low cost investments today we can make to enable that in the future? And that's something, again, we're working with government, which is to, when an unexpected event happens, production needs to increase dramatically, that we can much more rapidly get there.
And there are these concerns we touched on around munitions, the ability to get munitions back up to the levels that are needed, surveillance gaps, and obviously the Chinese surveillance balloon is an issue as well. And there are some who said, look, the US military-industrial complex is not fit for purpose. Is that a valid concern?
I don't think it's a valid concern, because on the Newtonian technologies, I'll call them, the production cycle and development cycle for, say, a new stealth fighter aircraft, a new aircraft carrier, a new infrared satellite to detect launches of missiles on the ground. Those products take 8-10 years to develop, test, and produce in enough numbers to make a difference. So most MODs and Department of Defense in the U.S. are kind of scoped for that timeline. But we can accelerate their digital technologies into the equipment we already have at a much faster pace. So what I'm trying to introduce is, and work with government to do, more rapid capabilities to insert digital technologies to upgrade a mission. Not just the airplane itself, but the mission of satellite connecting to airplane, connecting to radar on a ship. Every 6 to 12 months, we will have better and better capability.
Okay. There's been a lot of discussion, of course, about planes for Ukraine, and the F-16 has been flagged as potential. Do you think that F-16 would be appropriate? Would you back that, the F-16 being sent to Ukraine? And what is the time frame for training pilots, getting them up to speed?
So again, the U.S. government decides on export policies, what countries get what equipment. We actually are contracted with the U.S. government to provide allies the equipment that the government thinks that can be exported to them. So I can't really speak to appropriateness of a platform to a mission. But what I can tell you is we have opened up a new factory in South Carolina in the United States to produce F-16s. And we've got orders already for about 128 of them. We could take more orders as that factory gets up to speed.
Okay, Jim Teclet, thank you very much indeed. An ex-pilot as well, of course, CEO of Lockheed Martin, speaking to us here about how the military-industrial complex, or at least the world's largest defense contractor in Lockheed Martin's case, is combining with the tech industry here to provide the solutions that are needed. Guys, back to you.
Yeah, Tom, thanks very much. Bloomberg's Tom McKenzie on the ground there at that telecoms conference with the CEO of Lockheed Martin. And Chrissy, really interesting to start with the obvious question, you know, what is a defense contractor doing at a telecoms event? And he answered that very clearly, didn't he? Security really crucial to telecoms, to technology, and to all of those kinds of businesses. Also, of course, important to touch on their role in Ukraine.
Yeah, it's interesting to see the outperformance of Lockheed Martin. We know they really are trying to diversify. We know that they have those additional contracts from the U.S. government as well. Anna, what's striking to me is that we know a lot of these cybersecurity defense firms really rallied with the onset of the war in Ukraine. But the outperformance, the continued outperformance is really striking, even though year to date, of course, in the last couple of weeks, you have seen Lockheed Martin drop a little bit, but still very significant when you compare Lockheed Martin to the rest of the tech and telecom universe.
Okay, coming up on the program then, Chrissy, more from that Mobile World Congress in Barcelona. We'll be speaking with the CEO of Orange, the French telecoms business, as well as the global head of products at the manufacturer HTC. And markets boost, we'll talk about that. ECB hike bets after the inflation print in France and Spain, both of those coming in unexpectedly hot. More on today's data still ahead. Plus, coming up on the program, well, in fact, right now, UK Prime Minister Rishi Sunak is visiting a Coca-Cola factory at Belfast. He's holding a Q&A session about the Windsor Protocol, that sequel, if you like, to the Northern Ireland Protocol that was announced yesterday, hoping he can herald better relations more broadly between the EU and the UK. We'll continue to monitor that conference for headlines. This is Bloomberg.
Yes. Thank you. Given the climate crisis and recent food shortages, is it time for the UK?
We're investing in a lot of different capabilities and features that makes the in-store shopping experience that much easier, that much more compelling, whether it's price check, browsing inventory in this store, so that we can really make that experience as convenient and as simple as possible.
Convenient, simple, that's sort of what people have needed in the age of COVID. Is that here to stay, or do we go back when finally we all hope that the pandemic will be behind us in some way? Do our changing shopping habits go back again?
What's really interesting about retail in my 20-plus experience is that convenience never reverts itself. Now, the form of convenience has shifted, whereas, say, in 2000 to 2010, a lot of convenience was driven by more stores nearby. Now it's stores in addition to digital. There's nothing closer than the phone in your hand.
This is Bloomberg Surveillance Early Edition. I'm Kriti Gupta in New York with Anna Edwards in London. Matt Miller is off today. Let's keep you up to date with news from around the world. Here's the first word. Hong Kong is ending the last of the COVID restrictions that damaged its economy and its standing in the world. Starting Wednesday, the city will no longer require masks to be worn in public. Hong Kong leader John Lee says the city has completely returned to normalcy. The mask rule took effect in July of 2020. And the beleaguered group, Adani Group, isn't looking to refinance debt or inject capital. That's according to its chief financial officer. Billionaire Gautam Adani's conglomerate is on a roadshow to rebuild confidence after short seller Hindenburg Research accused it of accounting fraud and stock manipulation. The EU says it won't rush a decision on Microsoft's proposed $69 billion acquisition of Activision Blizzard. The EU's competition chief spoke with Bloomberg TV.
I'm not there to sense the passion. I'm there to sense the facts of the case. And as we always do, what is the present market conditions, how to look into the future. You know, we've had a number of cases where we look at sort of the innovation potential, the innovation race in a certain market, and that is, of course, what I get. So, so I try to get the full picture because we should not be captured by any side of the debate about the effects of a merger.
The EU hopes to finalize its review by April 11th. You know, Anna, it's fascinating to look at some of this deal scrutiny around the world, which has really been accelerated post-Brexit when you look at the EU, the UK, the United States, all getting on the same page after an era where a lot of these tech companies have really been able to kind of skirt the rules, skirt some of these antitrust cases in the last decade or so.
Well, and she was making the point that they're not in competition with each other, all these different regulators. She's saying it's not a race. Even the same... even when reviewing the same deals, she said competition regulators around the world can come to really different conclusions, which I thought was an interesting point. She also revealed that she's not a gamer. I don't know if you're surprised by that, Chrissy, but she's not a gamer. She's more into Sudoku. She told Guy Johnson a little bit earlier on. Also, though, she was talking about the Inflation Reduction Act in the US and the potential for that. And a lot of the conversation in Europe has been around nervousness that perhaps the US is going to be supporting its businesses in a way that Europe doesn't like. But actually, the message from Vestager and from others more recently has been around congratulating the US on getting involved in the sort of green industrial revolution game. And that was the line that she was keen to press during her conversation this morning.
You know, Anna, it's fascinating that a lot of the Inflation Reduction Act, the CHIPS Act, the manufacturing bring brought on stateside, a lot of it could turn around in just 2 years' time as we talk about this next presidential election. I wonder to what extent that's starting to get factored in as a possibility, just as the US and the EU perhaps getting on the same page.
Yeah, absolutely. Another thing that the EU, well, that Europe and the US seems to be on the same page about right now, from a macro perspective, is around inflation. I mean, not in the same page in terms of the actual numbers, but the direction of travel really fascinating. Friday, we saw that PCE number then, Critty, come in higher than had been expected. And today we see the French and the Spanish inflation numbers coming in higher than expected. And that has moved bond markets once again. So we saw some repricing of the European bond curve during Friday's session in response to treasuries. Today we see it sort of domestically generated, but certainly gaining momentum, working our way towards Thursday, where we get further core inflation data out of the Eurozone, and that will be critical because it's that core print that we're really going to be watching. We haven't peaked yet on core, and that has the market watching really closely.
I mean, this is essentially the basis, the fundamentals of this no landing scenario. Remember, we were pricing in a recession, a no-brainer recession in the fourth quarter of 2022 in Europe, further along in 2023 for the United States, and we still haven't seen that. But part of the argument, and I'm going to quote Matt Miller here, part of the argument of that no landing scenario is simply that reacceleration in inflation, and I wonder to what extent Europe is a precursor for the United States, Anna.
Yeah, absolutely. We'll watch that with interest. Let's get back to the Mobile World Congress, taking place, as we said, in Barcelona. Bloomberg's Tom McKenzie is there with the Orange CEO. Tom.
I can ask the question for her if we need to do that. It's a bit ironic, isn't it, that we're having communication problems. Okay, very pleased to say I am now joined by the CEO of Orange, which is, of course, France's biggest mobile company, and the CEO's name is Crystal Haydeman. Crystal, thank you very much for joining us. I was caught short there a little bit because I wasn't hearing the comms, and it's just pretty ironic given that we're a Mobile World Congress. Let's start with the macroeconomics. What is the sense that you're getting as you look across the data, you look across your consumers and clients as to the resilience or lack of resilience as we face up to inflation and slowing growth?
I think we live in a very uncertain environment, and of course, whether it's energy price, whether it's the fear of inflation, every country is going through, I would say, uncertainty. But in our market and in our industry, what we see is that our customers, more than ever actually, require reliable connectivity. Whether enterprises or consumers actually, we don't see an impact on their needs and their demands. That being said, obviously, our cost structure sees the impact of the inflation and the energy price. So that's why we're taking some actions, and our 22 results actually reflected some of the measures, and we managed to achieve our guidance despite, I would say, the headwind from the inflation.
So to be clear, you're not seeing on the retail side consumers cutting subscriptions, and you're not seeing on the enterprise side a reduction in capex. Are you clear on that?
So we don't see customers, I mean, we see customers worried about price increase that they see all over the place, and actually ourselves are obliged to increasing price in many countries actually. But we provide enough flexibility, and to be fair, in Europe, customers are lucky that they don't pay very expensive prices for connectivity. And there's so much need, reliable connectivity, that at least we don't see a reduction on demand or increase of churn. Now, we are very careful and we focus a lot on making sure we keep providing reliable connectivity and the best customer experience, because that's the success KPI for us in the industry.
And you talked about the pressures in terms of the cost structure. So to address that, what is your scope, the ability to continue to pass on higher prices in 2023?
Well, first of all, if you look at energy price, we had a very cautious approach where we have hedge pricing policy, so which means that we know for sure what's going to be our cost for energy in 2023, so we can at least anticipate that. Now, obviously, we have a number of assets and strength to face inflation, but indeed, we have also to address through price increase the things that we can't cover through cost optimization inside.
Do you have to cut headcount? Will you be cutting jobs this year?
We will not be cutting jobs. We had to adapt in some of our geographies. We have an age pyramid where in France we actually have many people retiring, which is also providing opportunities to reorganize. Obviously, we are very cautious on spendings. We've had a cost reduction plan for the past 3 years, which we successfully executed. We launched a new one. Optimizing SG&A is part of, I would say, our DNA. But this is no more than being competitive in our industry. But the price increase is obviously the thing that is maybe new in our industry to cope with inflation, which obviously all players are driving.
Okay, so that's a big topic, inflation. Another big topic is the EU's plans to maybe compel the likes of Netflix, the likes of Amazon and Alphabet and others to pay, to contribute towards the network as part of their fair share plans. Do you expect material changes and material progress on this? You've been vocal.
Well, first, let's start by what's the issue we're trying to address.
Yeah.
The issue is not to ask those people to pay. The issue is that we see massive traffic explosion in our networks driven by only a very few players that are indeed not contributing to the cost that they generate on our networks. So in the end, it's really about sharing the facts about traffic increase on our mobile networks, plus 30% traffic increase every year, which drives massive capex investment from our side, which we have to deliver, because otherwise our customer experience would be deteriorated, but only driven by 5 players for more than 50%. So that's the unbalanced situation that we have. And those players, indeed, do not have any price signal or price incentive to adjust their services to the real cost that they generate on our networks.
Very briefly, last one, on enterprise and cybersecurity. How do you hit scale? How do you hit profitability?
So our enterprise business is at the core of things that most enterprises need, because every enterprise is now relying on cloud, every enterprise gets working from home policy, every enterprise has application in the cloud, and connectivity, reliable connectivity, resilient connectivity is more important than ever. So we are transforming our business to make sure we position ourselves as the next generation connectivity player, integrator for enterprises, managing both cloud environment, infrastructure environment, but also cyber-secure environment.
Crystal Haderman, thank you very much indeed. The CEO of Orange, France's largest telecoms company. Plenty more coming up. Stay with us. This is Bloomberg.
To my anxiety levels, which are already through the roof, I want to talk about the social consequences of this, because it seems like an environment where inflation is high, growth is slowing, the Fed is explicitly trying to boost unemployment, like it seems like that is probably the worst environment for, you know, your average person on the street. And it almost seems like the Fed's goals here, they're almost anti-American at this point, or like anti the American dream, right? Like housing more expensive,
crushing the housing market,
crushing demand, crushing labor force. Like, what are going to be the social consequences of central banks, you know, having to do this in order to put a cap on price increases?
They're going to be severe. You know, we're already seeing, of course, a backlash against free market, backlash against trade and globalization, even a backlash against technology, a backlash against, you know, laissez-faire policies, because there has been a massive increase in income and wealth inequality. This is leading to populism of the extreme right and or of extreme left in many countries across the world, and authoritarian regimes becoming more popular across the board. It's a repeat of the 30s, literally.
When innovation strikes, Bloomberg Technology is there with the news and analysis you need. Every weekday, only on Bloomberg.
This is Bloomberg Daybreak with Lee.
On Bloomberg Radio.
Welcome to Daybreak Australia. This is Count Under the Close. Welcome to Bloomberg Crypto.
This is Bloomberg Surveillance Early Edition. Here's what you need to know. A surprise jump in French and Spanish inflation this month. That will boost the pressure on the European Central Bank to deliver more interest rate hikes. Switzerland's banking regulator comes down on Credit Suisse over the Greensill Capital supply chain financing affair. The bank was accused of seriously breaching its risk management obligations. And the annual Mobile World Congress puts the spotlight on new technologies and global security. We've heard from Lockheed Martin and from Orange this morning. Up next, we're back live to Barcelona with HTC. I'm Anna Edwards in London with Chrissy Gupta in New York. Really interesting markets right now, Chrissy. Thinking about the inflation picture, something we thought maybe we turned a corner on at the end of last year into this, and we're having to sort of rethink that. Certainly that's what the market's been doing all the way through February.
Yeah, really reflecting when it comes to risk sentiment. This is interesting because it's kind of hard to put numbers when you're not really sure just how hawkish the Federal Reserve is going to go, and really pricing in the lag, by the way, that not only the Federal Reserve but the ECB as well is going to be dealing with. I mean, when we're talking about this kind of macro story, to what extent are we waiting for this kind of a lot of the hawkishness, a lot of the tightening of 2022 to catch up to the economy and therefore get priced into the markets? Or is it the other way around? The market's priced it in first, the economy shows up later. So that's why you're seeing perhaps this kind of flip-floppy, to use a technical term, kind of dynamic in futures, at least this morning specifically, when once again it's unclear whether this will actually trigger some more hawkish responses from the Federal Reserve. Do we talk about 50 basis points? Futures right now kind of unchanged on the day, but remember they were lower earlier in the session, so I wonder how much of that dynamic is going to continue as we get closer to the opening bells. But Anna, to me, the story is in the bond market, because that's where you're seeing some real numbers being put on it. It's all about the round numbers. 2-year yield inching closer and closer to that 5% level at a time when we're talking about the Federal Reserve's peak policy rate in July hitting perhaps 6%. That's not the base case, but it is inching closer and closer that way. But let's get to some of those individual movers as well. Zoom Video, for example, one of the major ralliers, high above by about 6% after reporting some earnings. New customers, larger customers, that really surprising to the upside as well. Tesla also part of that trade, higher by about 1% in the pre-market, helping Elon Musk, by the way, regain his spot as the world's richest person after a surge in Tesla stock. But to the downside, Workday. And it's interesting because we're talking about business investment when it comes to Zoom, but Workday's seeing the opposite problem, less investment. They're kind of coming into the same move quarter over quarter, but shares are down about 2.3% at the moment. Nothing really to write home about. Remember, this earnings season, you're really measured by the success there. We are getting some breaking news, however, from a different part of the market, not tech, but energy specifically. Chevron raising their share buyback guidance to $10 billion to $20 billion per year. And this is on top of record buybacks that Chevron had already announced, higher by about 1% in the pre-market. Let's see how much of that accelerates, Anna, as we get closer to the opening bell. So that's the U.S. story. What is going on in Europe?
Yeah, certainly. It's been a transatlantic story, that return of cash from big energy names to investors. Let's have a look at where we are on the European picture then, Chrissy. Well, we're down by 0.1%, off earlier lows, though, for European equity markets. So although the loss is pretty broad-based, there are some sectors doing well. Banking and insurance amongst them, banking stocks going higher. Again, return of cash to shareholders is the theme, and Santander is certainly leading that charge today. Man Group is up by 8%. I spoke earlier to the CEO on this subject a little while ago. The CEO, Luke Ellis, who sees both good news and bad news when it comes to inflation. He spoke with me a little bit earlier.
Overall, I think the base effects mean inflation's coming down for the rest of the year. That's the good news. The bad news is wage inflation is not coming down, and particularly services wage inflation. And remember, services now for the US, for Europe, is really the dominant part of the economy. Until services wage inflation has gone, then we're not going to see a meaningful, sort of consistent drop in inflation.
Joining us now, Bloomberg Markets reporter Justina Lee. And Justina, it was interesting there. He had really interesting things to say about inflation. He actually thinks this is something that benefits active managers. So, of course, that would play well for Man Group. But he says we're going to be in a period, maybe to the end of the decade, of 2 to 6% inflation. Some people won't want to see that coming.
Right, and I think that really gets at the heart of the broader debate over inflation right now, which is how many of what we're seeing is just a matter of the war and maybe, the after effects of the pandemic, and how much of it is a shift in the long-term structural dynamics of the economy. It's pretty funny because I remember before the pandemic, everyone was saying how we're in secular stagnation and inflation is in this permanently low zone. But now it seems like the whole debate has shifted in the other direction. And the inflation numbers that we're seeing out of the euro area, out of the US, certainly, point to that direction as well.
And Justina, what is so striking to me is this idea that the ECB is still the most hawkish bank on the block. This idea that the Federal Reserve is no longer holding that title. Justina, to what extent does this kind of uptick in Spanish and French inflation kind of lead as a precursor or even a warning to the Federal Reserve to where the Federal Reserve may be the most hawkish bank on the street? What do you think?
Yeah, I think global central banks are really seeing the message from these numbers that even if inflation is on the way down, it's going to be a much choppier path than they expected. I mean, CPI out of France and Spain, surprised today on the back of higher food costs, and still electricity costs is still pretty sticky. And I mean, base effects should help from, in the following few months, but it does kind of look like that a lot of these pressures are not coming down that quickly after all.
Okay, Justina, yeah, a lot to think about when it comes to February. We've spent all of February, it seems, rethinking those assumptions around inflation's decline. Bloomberg's Justina Lee with the latest on the markets. Now, Credit Suisse seriously breached, that's a quote, its risk management obligations in the Greensill Capital supply chain financing affair. That is according to Switzerland's banking regulator. The Swiss bank has been ordered to take remedial measures. Bloomberg's Hugo Miller joins us now for more. Hugo, how serious is this then for Credit Suisse, and what does that mean, a serious breach?
Indeed, the language packs a certain punch, but as often the case with the Swiss regulator FINMA, there are not many things that they can really do to drive the message home. In essence, in this case, Credit Suisse is facing no fines of any kind, and it really has just been forced to take on a series of measures to improve its compliance, improve its risk management, and that's something that the CEO says he welcomes, even if it's not something that would have necessarily happened until FINMA weighed in.
So Hugo, give us a little bit of a timeline on this. Is this the end of the probe for Credit Suisse, or is there more to come?
The CEO, Ulrich Körner, said he welcomes what he called the conclusion of the probe, but in many respects, this is just the beginning, because although the bank, in theory, the discipline of the bank phase has ended, we now have enforcement proceedings that have been opened against 4 former managers, which essentially guarantees that both from a FINMA Swiss regulation perspective, this is very much going to stay in the headlines when the results of those enforcement proceedings emerge, whether it's 6 months or a year from now. But also don't forget that there is litigation over the Greensill affair in the UK, here in Switzerland and elsewhere. So we're essentially facing years of bad Greensill headlines still to come for the bank. So this is by no means over, even if Mr. Körner is wishing it as such in his statement today.
Okay, Credit Suisse share price down by 1.3% in today's session. Thanks for the update, Bloomberg's Hugo Miller with the latest there on Credit Suisse. Now, on to politics. Prime Minister Rishi Sunak has made a big step to repair relations with the UK's largest trading partner, but the last hurdle may be the biggest one yet, convincing sceptical Northern Irish unionists and pro-Brexit Conservative MPs to back his new post-Brexit agreement. Here he was at the press conference yesterday.
It's about stability in Northern Ireland. It's about real people and real businesses. It's about showing that our union that has lasted for centuries can and will endure. And it's about breaking down the barriers between us, setting aside the arguments that for too long have divided us, and remembering that fellow feeling that defines us, this family of nations, this United Kingdom.
For more on this, we're joined now by Bloomberg's UK correspondent Lizzie Burden, live in Westminster. So has Rishi Sunak been able to get a better deal than his predecessors? That's one of the key questions, I suppose, then, today, Lizzie.
Yeah, Rishi Sunak has seemed to be emboldened this morning. He's been talking down his predecessors' deals. He said that under Boris Johnson's deal, it has seemed that Northern Ireland wasn't really part of the same country. He's also been touting the economic benefits of what he has agreed with Brussels, echoing what Karen Ward, Jeremy Hunt, the Chancellor's economic advisor, said to us on Bloomberg Radio. Has he got a better deal? He says that he's been able to rewrite the Northern Ireland Protocol in a way that no one else has been able to do before, but checks still remain on some goods going between Great Britain and Northern Ireland. The European Court of Justice still remains the ultimate arbiter in terms of the application of EU law. But we have a deal. You even had the European Commission President Ursula von der Leyen calling him Dear Rishi. So you can see that the relationship's much warmer than with his predecessors. But for now, the tensions are going to remain until this gets through a vote in the Houses of Parliament and until power sharing is restored in Stormont, I should say.
Crucial context, Lizzie. But what's next for Dear Rishi, as you put it? There still is steps here. He has to get the support of the unionists, the Tory Brexiteers. What are the odds there that happens?
Well, in terms of the vote in Westminster, Keir Starmer, the opposition Labour leader, has promised Rishi Sunak the votes to get it through Parliament, but it would be embarrassing for the Prime Minister if he had to rely on Labour. So what he wants is to get the DUP, the Democratic Unionist Party, and his Tory Brexiters on side. You'd assume that the Brexiters would follow the DUP. So if we turn to power sharing in Stormont, you've had warm words out of the DUP so far. The leader, Geoffrey Donaldson, has thanked Rishi Sunak. He's been conciliatory. He has said that there are areas that they need to continue engaging with the government on, but not ruling it out for now. So we haven't also heard from the former Prime Minister Boris Johnson or Liz Truss. It'll be interesting to see whether they rear their heads in the next couple of days.
Lizzie, thanks very much. Bloomberg's Lizzie Burden with the aftermath, if you like, of that Windsor Agreement. Coming up on this programme, we'll be back to Barcelona, back to the Mobile World Congress. We'll be talking immersive technology with HTC's global head of product. Lots to discuss then. Shen Yi joins us shortly. Do you know your extended reality from augmented, virtual and mixed varieties? This is Bloomberg.
For the first, call it 18 years at Chipotle, this was you come into Chipotle along the line,
you interact with the crew, and you customize your meal. We've got this separate make line, and it's digitized, and so the orders come in, and they're really kind of staged so that if you say at noon, I want to come in at 1 o'clock, we hold that order, and we will send it to the crew like maybe 10 to 1,
Right.
so it's ready right when you pull up your car.
How do you manage these kind of two different staffing needs, right? And
Yes.
making sure you have the right amount of people
Yes.
at the right time.
We spend a lot of time projecting sales. A lot of it is, it's part art, part science. We're trying to bring more science and more AI into it. Because if you get the right sales projection, then you know exactly what your staffing needs to be. So if you get the sales right, you can get the entire restaurant staffed perfectly. With just a couple people, our average restaurant now does about over $1 million per restaurant in digital sales.
Enjoy the excitement of a night of music at Boston Symphony Hall with BSO Now. Watch brand new Boston Symphony Orchestra performances, behind-the-scenes storytelling, and memorable archival concerts, all from the comfort of home. Use our free 24-hour trial and see why the Boston Globe calls it musically rewarding. And the Berkshire Edge says the orchestra has never played better. Visit bso.org/now, where the music plays on. BSO season sponsored by Bank of America.
This is Bloomberg Surveillance Early Edition. I'm Kriti Gupta in New York with Anna Edwards in London. Matt Miller is off today. Let's go back to the Mobile World Congress in Barcelona. Bloomberg's Tom McKenzie there with the Global Head of Product at HTC. Tom, take it away.
Kriti, yeah, we're going to be talking about virtual reality now, augmented reality, two of those coming together with one of the leaders in the space, HTC. I'm very pleased to say I'm joined by the global head of product for the Taiwanese company that's really at the forefront of the virtual reality revolution that we're seeing, particularly when it comes to hardware and software. Shunyi, thank you for joining us. Does HTC now define itself as a virtual reality company?
Actually, we think of ourselves kind of beyond that. We're a technology company. We used to be very hardware-centric, and now we're beyond that. We're doing hardware, we're doing software, we're doing platform, we're doing services, things like private 5G, virtual production, the metaverse, and we're providing a total solution to all of our customers, right? So we're now more like a total solutions company that's has very specialized and high-end technologies.
So where is the bulk of the investment going? Is it focused on the hardware or the software, or does it divide up evenly between the two?
We actually divide them up quite evenly between various business units. Some are more focused on hardware, some are more focused on infrastructure, some are more focused on content and software, and some are more focused on platform as well. So we're trying to invest in, vertically invest in a lot of those key components so we can provide, as I said, a total solution for a lot of our customers who are looking for, as you get into the metaverse, not a lot of people know what they need for it, right? So we have infrastructure, we have software, we have hardware, we have that platform, and then we also have the content that will run there as well. So we're trying to invest in all of those so that anyone who's a little bit confused, we have a bit of everything that's perfect for you.
Okay, so they come to you, have all the solutions. It was a lot of fun. I put on one of the headsets yesterday. I was doing some virtual kayaking. It was very cool. Talk to us about the monetization, though. That's HTC Vive. You've been part of that business. You've grown that business within HTC. When does that become a solid revenue driver for HTC?
So we've seen the VR space and XR space grow. With our latest headset, Vive XR Elite, a lot of our focus went into how do we make this more accessible, right? And we wanted to make something that's good because we want your first experience to be good, that you want to come back. And we also want it to be, a lot more accessible in a way of, we have diopters, so you don't have to wear glasses. It's lighter than, most headsets on the market, so it's much easier to wear. And what you wore was the glasses version, right? So you can just put it on without having a bulky headset or even ruin your hair. Yeah. Those things are really important to driving adoption of those kinds of hardware.
My hair is very important to me. Is that a reason why you think of Mark Zuckerberg, you think of the metaverse, you think of what Meta is doing, and they've struggled with VR. They've struggled with the headset. What are they doing wrong?
I think we have a very specific focus on what we're doing, where we want to focus on a premium experience. Our business model doesn't depend on advertising or selling personal data. It's all about, we want to build privacy-centric devices, right? These are devices that they're using cameras to do tracking. We want to make sure all of that data is also protected for you.
Do you worry about the competition from Meta?
I don't think so, because we're offering, there are a lot of cheap headsets on the market right now, and we're offering something that's less cost compromised. If you want something that's better, if you want something that's a little bit more premium, and having something at the low end is actually a good thing for us. There's a lot of impulse buying, right? But once you've actually gotten into VR and you want something better, we're there for you.
What's the AI play for you? Open AI, ChatGPT. Are you building any of those into your products?
We have had AI investments for the past 10 years, right? So, we have business units that do medical AI. But with our XR products, we have AI when it comes to, that we're looking at when it comes to speech recognition, but also even our tracking. A lot of that's done through deep learning, right? That's how you can make it efficient, accurate, and without taking too much processing power on the headset itself.
What about the enterprise play? Are you in conversation with automakers, with the healthcare sector? How much progress have you made in having partnerships, signing up some of those big clients?
We've had dedicated XR hardware for enterprises when it comes to things like training, simulation, visualization, and that's in medical space as well. We have it in, things like de-escalation training. We a lot of our stuff is built for, bringing efficient training and efficient simulation to people, where if you wanted to do it in real life, it can cost astronomically a large amount. So our headsets are just a really easy way for them to actually, train lots of staff very effectively with high retention rates without that much cost.
Where's the next breakthrough? Is it in hardware or is it in software?
I think we're constantly making breakthroughs in hardware and software, right? With XR Elite, we made a breakthrough in being able to do mixed reality pass-through, high resolution, high dynamic range. We set this goal of you can take out your phone and look at text messages while you have the headset on. You don't have to take it off anymore, right? That is a breakthrough of not just hardware, but also software. How do you get all of that data through at very low latency so people don't get motion sick? Those are really key important parts. So for us, as I said, we're not a hardware company. We offer a total solution that involves us having to make breakthroughs in hardware and software together.
Shunye, thank you very much indeed. The global head of product at HTC on virtual reality, XR, AR. Doesn't seem too concerned about the competition for Mark Zuckerberg's Meta. Anna, back to you.
Yeah, really interesting conversation there, Tom. And the mention of motion sickness, that was certainly my experience of virtual reality. Thanks to Tom Mackenzie at the Mobile World Congress in Barcelona. Bit of breaking news just hitting the Bloomberg terminal as we were hearing that play out. Germany is in talks to merge its power grid operators through buyouts. This, according to our reporting here at Bloomberg, the German administration views the previous government's decision to privatize and split the grid as a reason for splintered management and slow expansion. So given that they are going to be now focused on renewables coming online, the government wants to upgrade the network, and this is seen as the quickest way of doing that. Quick update there on German energy. This is Bloomberg.
is the best investment advice anybody's ever given you?
You don't need to have a good idea every day. So there's times to be patient and there's time to press.
What do you think is the most common mistake that investors make, the average investor?
I think it's FOMO, so buy high, sell low. You know, and the amount of damage that does the average investor is big.
Let's suppose I have an extra $100,000. What would you say that person should do with $100,000? To put it in an index fund or something else like that?
Yeah, I mean, I think for the average investor, buying an index, but buying and holding and just letting it compound is really sensible advice. I think the more trading someone tries to do, the more damage they tend to do.
I think that it's hard to put your head around any narrative. Let's just be honest. We've had sort of a shift in, are we in some sort of stagflation fears moment? People were talking about that all day yesterday.
This is Bloomberg Surveillance Early Edition. I'm Kriti Gupta in New York with Anna Edwards in London. Matt Miller is off today. Let's take a look at what's ahead on today's agenda. At 8 a.m. Eastern Time, we get Target earnings that kick off the run of U.S. retailer earnings stateside. That, of course, continues throughout the week. Dollar General lows later on at 10 as well. We got consumer confidence data from the United States. How much is the consumer spending? How confident are they to do that? We're going to see some of the economic data snaps back there. It's also Goldman Sachs Investor Day. Sonali Basak live on location. She'll be speaking with Goldman Sachs President and COO John Waldron. That interview at 12 p.m. Wall Street time. Right now, though, she joins us right here on set for a preview of the event. A very big day for Goldman, your Super Bowl, if we will. Just put this into context. What can we expect? How big of a deal is this?
This is the second Investor Day, only the second in Goldman's history. So it's a very big deal. Not to mention it is into year 5 of David Solomon's tenure as CEO. Some of the strategic decisions that have been made a couple of years ago, set forward, they are now being rolled back when it comes to the consumer, and the attention is being diverted here to the asset and wealth manager for a new stream of steady income, or a continuous stream of steady income, as Goldman looks to its next act under David Solomon. The question is, how patient will investors be as they continue to pivot? The question is not about whether Goldman has grown or whether it has been efficient. It is whether it has kept up with its peers in terms of strategic decisions, big strategic decisions that will set it up for the future.
Yeah, really interesting to watch this, Sonali, because there are some very Goldman-specific conversations here around retail and around that wealth management story that you're mentioning there. But there's also the sort of the broader picture of Wall Street, and we've seen cuts in terms of jobs coming through from a number of places on Wall Street. I wonder how much of this is going to be dedicated to the Goldman Sachs specifics versus the Wall Street vibe.
Yeah, I mean, certainly the cost cutting here has been a part of the narrative. I want to point back to the last Investor Day for Goldman, where they did make efficiency as part of their main targets here, getting that efficiency ratio down. And one of those levers is headcount. It is cost cutting. It is some clamping down on compensation, variable compensation. Remember, Goldman during the pandemic years was enormously efficient, more than its rivals. But more recently, you did see the compensation ratio really tick back up. They're looking at a talent war that is still sticky on the high end of the spectrum here for the most sought after talent on Wall Street. So it's a difficult equation here for Goldman. They have to invest here in their core businesses while also showing that investors have that extra stable income to hold on to.
Sonali, thanks very much. That's where the wealth management then comes in. Sonali Basak joining us there. And don't miss Sonali's interview with John Waldron, President and COO of Goldman Sachs. That's at 12 p.m. in New York, 5 p.m. London time. Interesting on the jobs conversation. I was talking to Man Group CEO earlier. We heard him on inflation a little earlier on this program. He was also talking about jobs and where others are cutting back, an opportunity for that business, the world's largest hedge fund, to hire. An interesting one to find on the Bloomberg terminal if you're interested. That is it for Early Edition. Surveillance is ahead. Tom, John and Lisa will be taking you through the start of your US day. This is Bloomberg.
what are the biggest challenges for General Dynamics and what are the biggest opportunities?
So I think in any business, the challenges are solving complex problems that come to you. You know, the problems that come to me and my senior leadership team for resolving tend to be highly complex and nettlesome. So your ability to solve those complex problems are an important element, I think, of the value that we add to the company. And then I think opportunities, you always want to make sure that you've got a creative enough mind, an open enough mind to be able to see around square corners. What am I missing? You know, the why questions are really powerful. Why are we not doing this, or why are we doing this? I ask those questions a lot, and in the answers, you can sometimes tease out some real opportunities, some hidden things. But thinking creatively about opportunities and problems is really important.
And what about the industry generally? Do you think they have big challenges now as the defense budget probably comes down a bit?
So I think that we are all responsible, and we have an obligation to find the latest and best technologies that we can for our customers and deliver them in the most cost-effective manner we can. And I think that that's a challenge and an opportunity for all of the big defense companies.
This is Bloomberg.
Here we are talking about what does the landing look like? I'm looking backwards at 2022 and saying that looked like a landing to me.
The market collectively does not have a clue at this point in time. Hence, we're going to get a choppy market.
We're seeing the beginnings of a regime shift back to a point where interest rates matter.
We are moving back both in growth and inflation to what we would refer to as the old normal.
Disinflation is not a concept that is dead. It may be around the corner.
This is Bloomberg Surveillance with Tom Keene, Jonathan Farrow, and Lisa Abramowitz.
Remember the good old days? The disinflationary process had started.
It's transitory.
Yeah. The risks around inflation were becoming more balanced.
Yeah, what happened?
That was a month ago. Live from New York City this morning. Good morning for our audience worldwide. This is Bloomberg Surveillance on TV and radio alongside Tom Keene and Lisa Abramowitz. I'm Jonathan Farrow. Futures positive here by 1/10 of 1%. TK, we're back to looking at inflation in places like France, in places like Spain.
This has been terribly reported this morning. For America waking up, it's not transitory. Spain and France, and particularly France, the vector is ugly. The vector is not disinflation. Even worse, talk about transitory. John Farrow in the vegetable bin at Tesco or whatever the grocery stores are in England.
It's gone up.
17%. I don't really understand the 17% statistic, but easily 8 or 9% food inflation in the United Kingdom.
Things are moving in the wrong direction, and yields are higher again this morning. On a German 2-year up by 6 basis points, 3.1%. Worth pointing out at the beginning of March 12 months ago, negative about 70 basis points at the front end of the German curve. And Lisa, now, we're not talking 3% of the ECB, we're talking 4.
I'm so glad you said that. I saw that and I remember when everyone thought if they raised the rate to 1%, that all of a sudden you'd see this massive implosion of the entire debt market in Europe. And now we're talking 4% overnight rates over at the ECB, and you're not seeing spreads uncontained in Italy. So here's the question. Can they execute this? And is that going to be enough? Do we understand where central banks have to go to contain inflation that has been a lot stickier than people thought?
Welcome back.
Thanks.
Good to see you.
It's good
you
to be
seem
back.
excited to be back as well.
I'm excited to be back.
Just to get away from the family. This is good. Good morning to you.
Don't let anyone hear.
They're not up yet.
Yeah,
Equity
true.
futures positive at 1/10 of 1%. Let's whip through the price action for you in the equity market and in bonds as well. In the bond market, a lift in the US too, up by a couple of basis points to 393.17. In the FX market, euro dollar just about clinging to 106 as we close out the month of February, Tom. What a range for euro dollar. A low of 105.33 in the last week, a high of 110.33 when the ECB last met.
I'm going to go with the yields higher again. And again, we've got a more restrictive Bloomberg Financial Conditions Index, positive 0.15. We'll get to that in a moment. But I think the bellwether today is if you've got cash cash, get rid of it. And Chevron, what we're doing there, folds into every story we're talking about. And what I would suggest is here's somebody with a 10-year track record of 7.1% per year. You know, you look back 10 years, big oil's not doing all that much, but the free cash flow in this surge, John, is extraordinary, and it folds into everybody watching the show this morning in corporate America. How do they respond to this buyback frenzy?
The stock is up by more than 1%. Lisa, as you know, given that you've spoken to Mike Wirth in the last couple of months, the previously planned rate was 15 billion. That's going to go up to 17.5. And I imagine the White House might have something to say about all this too.
I have no doubt they'll come out and say, why not reinvest it? Why not start more production? And Chevron's going to say, we're doing for our business. We've been doing for our business. And you know what? Why aren't you saying this to others? And you're going to hear that kind of tone. Oil majors in general have been returning so much cash to shareholders, regardless of some of the pushback that we've been seeing. Talking about earnings and companies, Target releasing earnings this morning. They're holding an earnings call at 9 a.m. in New York. Here's a question that I have. What do we see with respect to inventories? That was a big problem. And do we see the same kind of guidance that we saw from Walmart in terms of the year ahead outlook? What is the audience for Target, right? So this is going to be the real question. Are they going to capture the lower end shoppers that are going to Walmart, or do they still continue to benefit from the discretionary items? At 9 a.m., the housing market, this will be very interesting. A number of price gauges coming out. The deceleration expecting to continue, which is a good thing. However, yesterday we saw home sales actually increase, pending sales, surprisingly to a much more significant degree. Are we seeing a reacceleration as mortgage rates comes down? This is sort of the real conundrum for the Federal Reserve, that it's just kind of stickier than they feel. And at 2:30 p.m., Chicago Fed President Austin Goolsbee, who is a voting member, is going to make his first public appearance in this role. He's giving a speech in Indiana. This is going to be really key because this is someone who does have a vote on the Federal Reserve, on the Open Market Committee. And he might give some guidance. Does he think that 2% really is the optimal end rate for inflation? Does he give some guidance of how quickly he thinks inflation could potentially come down, John?
Great to see him in that seat. Lisa, thanks for that. Thank you very much. Joining us now is Margie Patel, Senior Portfolio Manager at Allspring Global Investments. Margie, we have to begin over in Europe. Eurozone CPI out in a couple of days. France and Spain, upside surprises. What's your take on that this morning?
Well, we can see inflation is a global phenomenon. All the developed countries flooded their economy with money during COVID to try to stimulate the economy back. And we're really seeing the effect of this tidal wave of cash that came in by the sustained period of high inflation. So nothing the Fed is going to do short term is going to bring that down to 2%.
Margie, you are acclaimed for traipsing between fixed income and stocks, dividends, and share buybacks when the mood prevails. Have you ever seen, as the Wall Street Journal brilliantly sums up today, the $1 trillion moment we're having right now of buybacks, including this morning's Chevron? Have you ever seen this?
No, because I think this is one of the best positions corporate America has been. Their balance sheets are clean. They've been very profitable. Profit margins have held up. So it isn't surprising we're seeing a lot of buybacks where they don't want to reinvest it, which is the case in the energy industry.
But isn't also the question here the taxation of dividends, and the arch reason is a tax shield?
Yes, it is. Yes, it is. So I think they'd like to do that right away and return that money to shareholders.
Do you personally like it when companies buy back their shares? Is this a reason to go into the company, or is this not? Because it means that investment necessarily isn't going toward expanding the business in other areas.
Well, I would always rather see a company invest wisely rather than buy back shares. It's kind of sad, really, to say they have a high return on invested capital and the best use of their money is to simply reduce the size of their business. So I'd rather see companies that are investing their extra cash flow and improving the business, really.
Right now, how optimistic are you that we have seen, if not a bottoming out, some sort of feeling that the optimism for the economy outweighs some of the gloom that we could potentially see down the line?
Yes, I think the economy is surprisingly strong. The reason I say surprising is because we had that 4+% increase in short rates last year, and the economy, inflation is up, unemployment is really very, very down, and so that says to me there's a lot of strength in the economy, particularly because this cycle, when the Fed started tightening, there's no sector of the economy that really is hurting, is really way over levered, is really in trouble that might pull down the whole economy. So basically, things look pretty good.
Margie at the margin. That could be the name of your boat, Margie. Margie, when you look at the migration between fixed income bonds and quality equities, which way are you tilting right now? At the margin, which looks more attractive?
I still think you have to go for equities, even though we may see a pretty bumpy year, because interest rates are rather low for the rate of inflation, and yield spreads are rather narrow. So if we have the Fed raise rates more than people are expecting, you could see some negative price performance in the fixed income market. So I don't think those yields are as compelling as what we see on the equity side, really.
So, Margie, you don't think it's the year of fixed income, the year of the bond?
I think for the fixed income investor to get a yield, say in high yield, of say 6.5% to maybe 8%, is pretty good. But I think equities will do at least that well. And if you're a little bit more patient, I think a lot better over the next couple of years. Yeah.
Interesting. Margie Patel there of Allspring Global Investments. Doesn't think this Fed clearly is sufficiently restrictive, thinks they've got more to do. Mike Gapin thinks that as well over at Bank of America. He published in the last 24 hours. And here's the quote from him for those of you that would like to follow his work. A big slowdown in consumer demand might be needed for inflation to return to 2%. He said this could require several more Fed hikes. This will likely lead to recession, Lisa, because the non-consumer sectors of the economy already look soft. Mike Gapin of B of A.
He's not alone. A lot of people are gaming out what a 6% Fed funds rate could look like, which sounds unheard of based on what we saw 2 months ago in the immaculate disinflation, and suddenly is what people are putting back on the table. We don't know what's required to bring inflation down. And I think that you are right to point out this long and variable lags isn't cutting it for a growing number of people.
6 might sound foreign at the Federal Reserve. I tell you what, 4 at the ECB, Tom. Sounds even more foreign.
I don't
to
understand
me.
the
4
ECB.
at the ECB.
Foreign is the right word.
From negative 50 basis points, we're now talking 4% potentially.
I'm an old fogey on this. I don't think they've got the underlying nominal GDP to withstand that shock. I'd love to be proven wrong on that, to the spirit of continental Europe. What I would focus on, John, is this idea of disinflation, the dynamics on the screen, and the one vector that's not given way is the real yield, the 10-year yield, is just crept up for 8, 9, 10 days in a row. It's quiet, but it's there.
Traditionally in Europe, you'd focus on a spread between Italy and Germany. And I have to say, it's not threatening to break the wides of last year. But if you just focus on that and just on that and nothing else, you'll miss the fact that the whole of the fixed income universe across Europe, Germany, Italy, Spain, France, there's just a lift, Lisa. There's just a massive lift.
But it is globally, right? And so some people would say it's warranted because you have higher inflation. You're seeing something that seems controlled and explainable. The fact that you're not seeing a peripheral breakout means that there isn't going to be the same kind of dissent among ECB members and among some of the member states to fight inflation and make that the premier concern, because they're dealing with it too. I mean, this is unique. And I just wonder what the consequence is with all these central banks raising rates, why we haven't seen a more significant long and variable.
Why we haven't seen things break as well.
I do
fixed
wonder
income
about
in
that. It's kind
Italy
of shocking.
and elsewhere. It's amazing. We're going to spend this morning talking about the CPI data out of Europe. We'll get a read on Germany tomorrow. We're also going to talk about this buyback over at Chevron. Warren Buffett over the weekend in his investor letter. When you are told that all repurchases are harmful to shareholders or to the country, or particularly beneficial to CEOs, you are listening to either an economic illiterate, Tom, or a silver-tongued demagogue. Just bear that in mind. We might hear some complaints a little bit later.
You nailed this, John. And what was so interesting here about Mr. Buffet, and thank you, Doug Cass, so much for emailing me on the wonderful Henry Singleton. He's the guy that invented this. Buffett worshipped Henry Singleton of Teledyne. I'd forgotten his name. Thank you, Doug Cass, for sending that to me. He was at Teledyne. He was out of the Naval Academy, electrical engineer, and he said, do a share buyback, but do it when the shares are cheap. And that's what Buffett, that's the nuance here that we're talking about. Is Chevron cheap?
Coming up shortly, a little bit later this hour, Chris Ferrone, looking forward to that conversation. In the next hour, Whaley of BlackRock, fantastic conversation in the 7 o'clock hour, about 50 minutes from now. And coming up next, Bloomberg's Anne-Marie Hordern down in Washington, D.C. Futures positive by 0.1%. Bramo's back. That's a beautiful thing.
It is a beautiful thing.
It's a wonderful thing.
Glad to be
Welcome
back.
back.
Thank
This is
you.
Bloomberg.
You're gloom-free there.
Keeping you up to date with news from around the world, this is The First Word. I'm Madison Mills. A surprise inflation report today from France and Spain, both seeing prices rise in February. Consumer prices in France jumped by a record 7.2% from a year ago. Meanwhile, Spain's inflation rate hit 6.1%. That will increase pressure on the European Central Bank to deliver more of those interest rate hikes. And for the first time, markets are pricing in a 4% peak rate from the ECB. And Hong Kong is ending one of the world's longest mask mandates after 945 days. Hong Kong leader John Lee says the city has completely returned to normalcy. Shares of companies linked to tourism gained on the news, and this comes after the past 3 years of global isolation have weighed heavily on the city's economy and global standing. And here in the States, the Supreme Court hears arguments today on President Biden's move to forgive the student debt of more than 40 million people. Republicans contend that the president is overstepping his authority on the move. Biden put a freeze on federal student loan payments on his first day in office. And in Ukraine, President Volodymyr Zelensky says the defense of the besieged city of Bakhmut is quickly running out of options. But Zelensky stopped short of announcing that his troops would pull out. Last week, he said that Ukraine would not defend a Bakhmut invasion at any cost. And Chevron is showing confidence in its ability to generate cash even after a 30% decline in oil prices. The energy giant will repurchase the stock at a rate of $17.5 billion annually, starting in the second quarter. Previously, Chevron had planned a $15 billion buyback rate. Global news powered by more than 2,700 journalists and analysts in over 120 countries. I'm Madison Mills. This is Bloomberg.
Was going to keep Green World Cup. This is a 3 as the economic picture does.
The BOK is getting ready to make
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
A multi-trillion-dollar industry. There's a lot of ground to cover.
Commodities got absolutely crushed.
We'll show you what's happening in ETFs like no one else. Bloomberg ETF IQ. Monday on Bloomberg.
As we mark 1 year since the beginning of this full-scale invasion, the message I bring you from President Biden is simple. America will stand with Ukraine for as long as it takes. We commend your ongoing focus on the importance of fighting corruption and President Zelensky's goal of strengthening accountability and good governance.
A surprise visit to Ukraine from Janet Yellen, the U.S. Treasury Secretary there. We'll pick up on that story in just a moment. Let's pick up on the price action. If you are just tuning in, good morning to you. Equity futures elevated by not even 0.2% on the S&P 500. A little bit of a lift to close out the month of February and looking to close out the month with a month of losses. In the bond market, yields higher, materially so through the month so far, of 2 basis points on a 10-year this morning, 393.76. Yields much higher over in Europe on the session off the back of hotter CPI out of Spain out of France. A read on German inflation comes tomorrow. The euro marginally stronger here, Tom. Euro dollar 106.15.
John, thanks so much, and we'll continue to watch this. John, the inflation story to me, I think, is just underreported today. I think it's just a huge deal.
We were hoping it would go the other way, Tom. You remember those central bank
Hoping is the right
meetings
word,
back to back? You had Chairman Powell on the Wednesday turn around and say the disinflationary process had started. The following day, you had the ECB President Christine Lagarde saying the risks around the inflation outlook have become more balanced, and the data is just pushing aggressively in the other direction.
And we'll have to see on the data today. We get to, is it tomorrow, John, is ISM? Today we've got, as Lisa mentioned, a little bit.
Next up, I think, for this market is German CPI coming up tomorrow, and then Lisa, the ISM in America on the US side of things.
Which has continued to surprise to the upside, which is a negative.
Right now, on Secretary Yellen in Ukraine, Anne-Marie Horton joins us. She's Bloomberg's Washington correspondent. I think the nation, Anne-Marie, needs an explanation of this. I get that the head of the Pentagon, I get that military officials, I get even that the president shows the flag in Kyiv. Why is the Secretary of Treasury there?
Well, she's there to mark the one-year mark of Russia's invasion of Ukraine and reiterating Biden's statement, but she talked a little bit more about this financial aid. So it wasn't just about the military, and what she was talking about is that Americans need to know that it is money well spent. And to the Ukrainians, she's talking about the fact that, yes, there is this defensive in the east, but also that they need to make sure the country is running in terms of everyday provisions and items and things you do, like going to school, making sure there's infrastructure. So that was really her message. It was a little bit different than obviously the one the president made, but clearly the U.S. wants to show a full sign of support in Ukraine as Russia, as they mark this 1 year of Putin's invasion.
Are the allies on board with this and that they will send finance ministers?
Well, listen, over the course of the past 12 months, you've seen a number of leaders around the world show up. I mean, most notably to me over the past 72 hours was Prince Faisal, the Saudi foreign minister. This is the first Saudi official to visit Ukraine in some 30 years. And as much as this was an olive branch to the Ukrainians, they were, talking about MOUs for energy and humanitarian aid. But this was a huge olive branch to the Americans. The U.S. was in this quote-unquote review of their partnership. And then yesterday you had Admiral Kirby coming out to the platform in the press room talking about how they welcome this visit by Saudi Arabia. So this, to me, spoke volumes to not just Ukraine, to the United States, but also to the Arab world. This is the first Arab official to go to Ukraine.
As we commemorate and really mourn over the full year of this war that's been playing out in Ukraine, we're dealing with also the aftermath of it and the renewed focus on energy, on oil, and oil production in particular in the U.S. Will this administration have a response to the Chevron buybacks announced this morning? Is there still a continued focus on reinvesting in U.S. production?
Listen, this will certainly, I'm sure, have a tweet from the president or the press secretary at some point today. The administration has lambasted the oil industry for the share buybacks and instead not putting money into more production. This is something also that I think the administration thinks really plays well with their constituents and in the polls. So I'm sure we will get a response from the U.S. administration, and I'm certainly sure that it will not be a friendly one to the oil industry.
Does this administration not like buybacks just in general? I mean, I ask this because there was a story about the CHIPS Act and any money that companies receive from it being used for share buybacks. Is this sort of a overall blanket feeling that it's bad politically?
I mean, it does feel that way, and the president even mentioned these kinds of things, share buybacks and dividends, in his State of the Union speech. So this is something that the administration constantly talks about when they talk about big multilateral corporations. When you're looking at the CHIPS program, Lisa, it's not even just share buybacks. There's also social provisions to it. If you're taking this money from the CHIPS Act and using these grants, then next to your manufacturing plant, you also need to make sure there's some sort of daycare place for individuals that work in the manufacturing plant to make sure they can have proper care of their children. There's also a foreign policy angle to it. countries of concern. You cannot be manufacturing in a real sense if you take this money. I think what's clear from the administration is we are happy to invest in this U.S. industry, especially when it comes to semiconductors, but there will be strings attached.
Maish, I'm just picking up on that line in the transcript from the State of the Union address from the President on fossil fuels. We're going to need oil and gas for a while. I believe the Republicans then laughed. And then he had to go one step further. What does that mean? We're going to need it for a while. And what do you think that the big U.S. crude energy suppliers are thinking when he says that?
Well, I think they're thinking, we've been telling you this, right? We've been telling many people, especially on the far left of the Democratic Party, that potentially thought we were well far ahead of the energy transition, that we're not there yet. And it's especially difficult when they are reimagining the global energy map with sanctions on Russia. That clip, Jonathan, will probably be played by Republicans going into 2024 as a way to say that this administration was wrong when they came in on their energy policy. I think what the president is saying to the American people is we do need fossil fuels, and we're going to need them longer than many had potentially thought.
AMH, thank you. Great work down in Washington. As always, we'll catch up with Anne-Marie in the next hour. I want to pick up on a line from Secretary Yellen. It was this line here: we command your ongoing focus on the importance of fighting corruption. The United States is committed to about $32 billion of assistance to Ukraine for security, to basically fight this war. Now, Lisa, there is a corruption issue in Ukraine. It's well documented, well publicized, and I think the Secretary going over there, the Treasury Secretary, and essentially saying that pretty clearly to them tells you the concerns that we still got at home in Washington, D.C.
Oh, it's a political liability on a massive scale, especially at a time when a lot of strategists say that Vladimir Putin, the whole goal, his game plan, is for the West to become divided, lose interest in funding this war, and then going in and just and then taking over Ukraine. So how does this administration fight the potential for corruption to undo what they've done and reduce some of the political power and the political will?
May I suggest that she went for her good friend, Kristalina Georgieva, to give cover to the IMF on their next tranche of aid, where Georgieva can go to the assembled and say, look, the Secretary of Treasury is behind me on this. I think there's some theme to that, too, as we go to the spring meetings and the other challenges the IMF has.
Number one issue at the spring meetings for you?
The four nations. You know, is published here: Nigeria, Turkey, I can't remember the others. It's like a game of Risk, 3 on 2 Central America. I can't keep track. But the answer is they've got their hands full with a select group of nations. I went back and forth with our Buenos Aires office today on peso, now out to 197 in Buenos Aires. The black market rate is 379.
I wonder if they're going to be talking at all at the IMF meetings about the idea that the developed world is raising rates to levels not seen since 2006, 2007. Remember when this was thought to be a huge liability for the developing world? Is there that same pushback at a time when inflation is as hot as it is? I mean, that's going to be a real potential hot button issue for
Let's
them.
go ET. The gravity for the United States, the United Kingdom, and other fancy nations is normal. The gravity for EM is like Jupiter. It's like ET squashed down. I mean, you with me here? Stay with me. Come on, folks. Come on. ET
let him carry on.
ET is cute and squashed down because he's on a heavy star, heavy planet.
Okay.
The gravity's bigger, so cellular they squeeze down.
So who's ET?
Who's ET?
Don't ask more questions. I don't think the IMF's leading on anything right now. I think the leadership's all over the place. At the start of the year, it was all about the prospect of a global recession, and now it's central banks need to hike more to get inflation back to target. Pick one.
We're investing in a lot of different capabilities and features that makes the in-store shopping experience that much easier, that much more compelling, whether it's price check, browsing inventory in this store, so that we can really make that experience as convenient and as simple as possible.
Convenient, simple, that's sort of what people have needed in the age of COVID. Is that here to stay, or do we go back when finally we all hope that the pandemic will be behind us in some way? Do our changing shopping habits go back again?
What's really interesting about retail in my 20-plus experience is that convenience never reverts itself. Now, the form of convenience has shifted, whereas, say, in 2000 to 2010, a lot of convenience was driven by more stores nearby. Now it's stores in addition to digital. There's nothing closer than the phone in your hand.
Manage being the foreign minister, the prime minister, and the head of QIA at the same time? Doesn't that take a lot of time?
I was working sincerely more than what I should do. And it's if it's a candle, it will be burned by now completely.
Ton of retail earnings through the week. It starts this morning with Target. We should get those numbers in a couple of minutes. When we get them, Lisa's going to be all over it.
It's fun.
Wait for that.
I am.
I don't know if Lisa'd call it fun, but Lisa's got a screen up ready to go.
Don't you agree with me? Every story is different.
Sure.
It's like
tends to be that way, and they're all fun. Super exciting. Okay, futures are up by 10 to 1% on the S&P to close out the month of February. Pretty dreadful month, to be honest with you. Down on the month by about 2.31%, but really you need to go down from the highs of the year right before that payrolls report on a closing basis. We're down from those highs by about 4.73%. Yields are higher by 2 basis points on the session on a 10-year, 393.95. Off the lows of the year, though, on a 10-year, we're higher by about 60 basis points. Off the lows of the month on a 2-year, we're higher by about 80 basis points off the intraday low of early February. Just getting those numbers right now from Target. Lisa, what do you see?
Well, first of all, a pretty big disappointment for last year. Full year adjusted EPS $7.75 to $8.75 versus the estimate of $9.25. So looking forward, it's a big problem for them, and that is not going to be positive for their shares, which I'm sure are lower on the day. When you look over what they're talking about, they're expecting operating margin to reach low single digits. They're talking, that they expect some of their revenue, but honestly, the operating income margin, they're expecting to go beyond the pre-pandemic rate of 6%. That isn't necessarily creating any confidence. You're seeing those shares decline by more than 5% on the heels of that. I'll keep digging through that and get you more details.
Jen, these are amazing headlines, and the one that comes out, their comp average transaction was 0%.
Yeah.
With this inflation,
that's not going to get it done.
I've never seen a headline like that.
So they give you an outlook, Tom, for the first quarter and a full year. They see the first quarter adjusted EPS in a range of 150 to 190. The estimate was 219. They see a full year adjusted EPS range of 775 to 875. The estimate was 925. Stock's down 4.8%. And if you just go through the previous few quarters on earnings day for this name, Tom, they were down 13% after reporting earnings in the last quarter. They were down 2.7% on the day after reporting earnings in the quarter before that. And you will remember what happened in May 18th last year, when the stock cratered 24.93%, and they're down another 4.8% this morning. They just can't keep out of trouble on earnings day, can they?
Lisa, what do you got?
Well, what's interesting to me is that they beat on earnings per share in the fourth quarter, and we've seen this from a number of companies. It's all about the forecasts, right? That actually in the fourth quarter, the last 3 months of the year, it wasn't bad. It's going to get worse, and that is the message that we're hearing from Walmart, and that is the message that we're hearing from Target.
You look across Meta, Amazon, and all the rest of digital, the layoffs that we're seeing, dribs, drabs, some of the smaller, non-profitable digital firms. Target fourth quarter digital comp sales down 3.6%. That was an unimaginable event 5 years ago with digital growth.
But they're also dealing with some pretty stiff competition. Walmart's been investing really heavily in their digital world to try to compete with Amazon. Are you seeing a consolidation in the digital world that's more significant with Walmart and Amazon, and it's harder for Target to break into? I wonder if there's some idiosyncratic story there too.
We'll continue to look at this. Lisa's going to dive into it, and of course, she's going to have fabulous coverage of all the other retailers as well. Now joining us, frankly, the interview of the day, given the gyrations of the moment, is Christopher Verone, partner and head of technical macro strategy at Strategas. It is a Baird company. Chris, there are two types of charting. There is stochastic, looking at the jumps, trying to catch the falling knife, and there's trend-based. You and I are on the same page on the efficacy of trend-based. Is there a trend out there right now?
I think there's a dominant trend out there, and